All right, ladies and gentlemen, very good morning. Dobry den, dámy a páni. It is a great pleasure and privilege for me to welcome you here in the room and also to welcome those people who are online. I think we had quite a large number, more than 150 online applications for this event at the NBS, the Slovak National Bank. And to welcome you to this joint National Bank of Slovakia SUERF workshop on macroprudential communication. So I think we have a pretty exciting and also a pretty challenging day ahead of us, given that the research on how to communicate about financial stability and macroprudential policy is still rather limited. I would say it's actually pretty much in its infancy. So on the one hand, this seems quite surprising. Since the global financial crisis started in 2007, this is now almost 20 years ago, hard to believe. The role of financial stability and macroprudential policy has increased enormously. So both micro and macroprudential rules and regulations have developed substantially across both developed and emerging economies. And financial stability has become a key function in most central banks. In fact, in many central banks, it's also embedded because they are also the regulators. But on the other hand, if you look at financial stability, it is very, very complex. And the same holds for macroprudential policy. It's sometimes not even easy to define what is really the objective here. And when it comes to macroprudential policy, there is a number of intermediate objectives. And there are many different instruments. And in some countries, on top of it all, there is decentralized decision-making. So you have the central bank, you have sometimes the finance ministry, you have the financial regulator. So it's a pretty complex field of work. And all of this creates, of course, serious communication challenges. And it makes it also more difficult for researchers to analyze what is happening in this field. So in the workshop today, we would like to take stock of some of the existing research and the practical policy experiences with regard to the communication of financial stability and macroprudential policy. And we will also draw on insights from monetary policy communication, which is a much more established and developed field. So this is, of course, a pretty ambitious aim for a half-day workshop, but we have an advantage. So we can leverage today on a truly superb lineup of speakers from global, European, and national institutions and academia. So I'm very optimistic that our deliberations today will yield some interesting and valuable insights and help us to move forward in this field. So I'm not going to introduce all the speakers now because they will be introduced at the beginning of each session. But I would just like to use this very short opening statement to give a special welcome to a group of, we'd call it a macroprudential policy tour group. So that's a new concept. So basically it's a group of public sector officials that is currently participating in a joint JVI, European Central Bank, National Bank of Slovakia course on macroprudential policy implementation. And they've decided to come here to integrate this workshop into the course for this week. So without any further ado, let me now pass the floor to Ernest Gnan, the Secretary General of SUERF, who will moderate the first session. Thank you very much and welcome again to NBS.
Thank you very much, Rainer, for these warm words of welcome. Thanks really to you, to Jan Klatschko, and to the MBS for the really smooth cooperation in preparing this and for the generous hosting of this event. Now, as Rainer indicated, we thought that it might first be useful to take stock of monetary policy communication has to offer in terms of lessons, experience. So we have a long history, 30, 40 years of communication. It has totally evolved and changed over time. And so what can Macropru communication learn from this? What has it already taken up? And I'm really happy and honored to welcome two outstanding experts who have been working in both fields actually for a long time. Our first speaker at our first session will be Michael Ehrmann, Head of Monetary Policy Research Division at the European Central Bank, and soon professor at the Frankfurt School of Finance, as those of you following LinkedIn and so on will certainly have noticed. And secondly, Davide Romelli, Associate Professor at Trinity College, Dublin. David is also a SUERF research affiliate, and we know each other very well from Bocconi University, long-term colleague. I'm very happy and pleased, and may I ask you too to come to the to the lounge area, and yeah, to take one of those microphones. And Michael, can I ask you to start straight away? Yes, but if you want, you can just and I'm also supposed to tell you, you can put questions on Slido. Let's see whether I'm able to handle this. So, I know, yeah.
Okay, so thanks a lot. Thanks a lot for the invitation, for the nice introduction here. It's really a pleasure to be here today and speak about what I think is really an exciting topic. And as Rainer already said, I think it's dramatically under-researched. So, you know, I think we can hopefully sort of give a little bit of an impetus to that topic today. Yeah, I'm glad you went back from slide 2 to slide 1 because there's a disclaimer on that slide. I mean, not much more than that, but the disclaimer obviously is important here. Whatever I'm going to say are my own personal views and not those of the ECB or the Eurosystem. So our assignment was to think about monetary policy communication and what can macroprudential policy take away. And it's actually the immediate assignment was recent innovations and lessons. And I'll get back to that in a second. So I was thinking about structuring my remarks along two dimensions here. One is, or in two subsets, and this is basically split up in terms of the target audiences of communication. And I think this also nicely aligns with the reasons why monetary policy communication is taking place. So on the one hand, there's a lot of emphasis on communication for better monetary policy effectiveness. This is something central banks have been doing a very long time. They are very comfortable in doing this because this is mostly addressed to experts. And we know that experts listen a lot intently. They understand central banking issues. We also see them reacting instantaneously in financial markets, for example. So it's actually very easy to sort of understand how they react to central bank communication. So this is sort of the area that central banks have traditionally covered a lot in their communication. Now, more recently, there has been an increase in communication with the purpose of democratic accountability, and that is communication mostly addressed to the general public. I mean, obviously also to Parliament, but I think there's been much sort of increased emphasis in talking to the general public, and this is much harder to do. This is an audience central banks are not really familiar with. Again, it's a new endeavor. The general public is largely out of reach. They have other things to do than to listen what the central bank has to say. They have much less knowledge. It's much harder to understand how do they react to this. So I think these are two very different target audiences, and I want to split my remarks along this dimension. But before doing so, let me get back to the assignment of talking about recent innovations. I actually also think we need to step back a little bit and think about the not so recent innovations in monetary policy communications and what they had to say on macroprudential policy communication. Because monetary policy went from secrecy to transparency. Some people call this an evolution, others call this a revolution. It took something like 35, 40 years to do that. I think macroprudential communication has sort of had the advantage of just being able to start where monetary policy already was when macroprudential policy really was implemented. So it has very quickly expanded the scope and the range of its communication. So we have, I just thought, about a few outlets that macroprudential communication is already using. There's communication outlets for democratic accountability, like annual reports. There's testimonies to Parliament. There's data releases, and then there's also a lot of communication outlets that monetary policy communication uses to communicate with experts, like in this case it would be financial stability reports, for example, or background analysis. There's research papers being put out. There's conferences, and today's workshop is one example of this. So I think we've already gone a very long way. Within 5 years or so of macroprudential policy, we've already sort of implemented everything that took monetary policy something like 3 decades to do. So I think that's great. So let me start thinking about communication to expert. What is new in sort of what are recent things that monetary policy communication was dealing with? Well, we've had a long period where monetary policy was at the effective lower bound, where central banks were using forward guidance. That was a very peculiar type of situation in terms of communication, because basically markets knew exactly what to expect from the central bank. Now after years of forward guidance, then all of a sudden we had big shocks, uncertainty increased, central banks were exiting forward guidance, some more, some less successfully so. But then it was really important to talk again about the central bank reaction function in monetary policy. So I've put a few quotes here from the current communication by the ECB. There's going to be an update later today. So this is obviously the earlier communication. But there's a lot of stress on the ECB not pre-committing, again, to make that distinction between forward guidance period, meeting by meeting approach, data dependency. And there's a lot of emphasis in trying to clarify the reaction function, right? So the ECB currently has sort of 3 things it stresses in that regard. And there's research now which has shown that markets were really uncertain about the central bank reaction function after the exit from forward guidance. And only once central banks started raising interest rates, they started to reassess the central bank reaction function. So I think this is something that over the recent years has occupied central bank communication in terms of monetary policy. And then, of course, now central banks have a lot more tools than they used to have before forward guidance was implemented. So you also need to communicate, how these different tools are used now in the current juncture. And again, there's obviously a similarity to macroprudential policy, which also has a lot of tools. So this was, how do you, in a situation of elevated uncertainty, how do you actually talk about the central bank's own actions, right? And the idea here is you want to reduce uncertainty about what the central bank is doing, generate clarity about the reaction function. Now, obviously, at the same time, central banks are now also thinking, how can we communicate about the own assessment of uncertainty, of the economic uncertainty that is out there. And there's right now a lot of discussion about scenario analysis, for example. So the Bank of England, as you know, with the Bernanke report, is in the middle of discussing this. Several other central banks are doing this as well. Here's an example from the Riksbank, which already has scenario analysis in place. And what I also find interesting, some central banks have started emphasizing more their near-term forecasts, acknowledging that if you have long forecast horizons, uncertainty is just so pervasive that you really don't want to stress your long-term forecasts in communication to the public, and not even to experts. So central banks were really sort of thinking hard about how do we deal with this new situation? How do we communicate about uncertainty? Another thing that was coming up now recently is, again, coming out of this forward guidance period where I think there was a lot of clarity what central banks would be doing. Different views came to the forefront afterwards. Monetary policy decisions are taken by a committee, and that means different views arise naturally. I mean, that's why you have committees in place in the first place, and then these people obviously express their different views. And there's a trade-off here. You do want to communicate individual views because it helps acknowledging uncertainty, right? I mean, there is a committee which brings different views to the table. That's the idea of a committee. So you want to acknowledge that. You also, again, for accountability reasons, you do want to talk about the different views that are there around the table. At the same time, if you communicate different views in an unstructured way, like people talk about disagreement happening in the discussion, for example, that tends to weaken the market impact of communication. So there's a lot of research right now which shows this. I picked one example, which I thought was fitting because this is a co-author of mine is part of the Gnan dynasty here. So this is not, it's not his paper, but it's part of the family. So we looked at what happens to financial markets on days of the ECB's press conference, on normal days and days when there is actually a leak coming out of the Euro system, which sort of puts to the front that there might have been disagreement in the meeting. And then you actually see here that across the different maturity spectrum, actually the market impact of the press conference is weaker than it would normally be. So putting different views out there in an unstructured way, I think is potentially detrimental because it weakens sort of the policy message. Let me move on to communication with the general public. This is something central banks have expanded a lot, put a lot of effort into this right now. This is really hard for various reasons. One, the general public has very heterogeneous views compared to experts. And I'm trying to illustrate this with this chart here. So this is based on tweets about the ECB, where we were running sentiment analysis. So we were trying to see how do people talk about the ECB in their tweets. So you have strength of views and subjectivity on the two axes here. The red dots that you see are tweets by experts. And you see how nicely behaved they are. This is the communication audience that we typically focused on as central banks, right? So they have very moderate sort of scope that they occupy in this area here. And now we're trying to reach out to the general public, which is the blue dots, okay? So very, very heterogeneous audience, very different views, which makes it a lot harder, obviously, to communicate to them. They are also largely unaware of central banking issues and very difficult to reach. And again, the attempt to illustrate this with this chart here. So we were trying to understand back in 2021, when the ECB announced its new inflation target, did the general public hear about this? So we conducted a survey. We asked people, did you hear about something from the ECB in the last 2 months? Half of the people said, no, I didn't hear anything. Of those who said they heard about the ECB, we also asked, what did you hear? Most of them actually told us, well, I don't remember. I heard something, but I don't remember. And many others gave us very implausible things. And very few actually said they had heard about a change in this strategy. So they are hard to reach. They are unaware of central banking issues. Then the language is also difficult, right? Even when the communication reaches the general public, they find it difficult to understand. And there's clearly much less understanding of central banking issues. Very often, if you ask people, what happens if interest rates go up? What will happen to inflation? They get the sign wrong, right? So we're really starting from a very low level of understanding. So very difficult communication audience to deal with. And then, one more thing I do want to raise, because again, I think this is something that we've observed recently. It's how central banks are trusted by the general public. There's a lot of research which shows that trust is important. It helps central banks achieve their objectives. For example, it anchors inflation expectations, which is what you see on this chart here. So the more people trust the ECB, the closer their inflation expectations will be to target. There's a more effective monetary transmission mechanism. It helps contain political pressure on the central bank. So a lot of reasons why you want to be a trusted central bank. But you can lose trust very quickly, and it's very hard to regain trust. So the chart here shows trust in the ECB from the Eurobarometer, and you sort of see how after the global financial crisis and the European sovereign debt crisis, trust really was lost, and it never fully recovered, right? So it was a very slow recovery process, which didn't ever get back to the initial level. And I think we've had a couple of reasons why trust might now be have been lost for central banks. There have been a lot of crises. Some central banks were struggling with exiting from forward guidance. We've had the inflation surge. We've had large forecast errors of central banks. All of these are things that were critically discussed in the public and might have led to a loss in trust. And I would argue it's going to be even more difficult going forward to keep maintain or rebuild trust. For example, because there's a rise in polarization and populism. People form opinions much more based on social media, which is a tricky communication channel. There's threats of misinformation, disinformation, etc., etc. So this is sort of my stock taking a little bit about recent things in monetary policy. So what about macroprudential communication? Can we build the bridge here? Before I sort of do that effectively, there's one thing I did want to mention. I think it's important that we think about how can we separate these two things. We can learn from another, but I'm not sure we want to mix the two. And this is important because some of the policymakers have different assignments. So the ECB president, for example, is both obviously the ECB president and therefore chairing the Monetary Policy Council, but is also the chair of the ESRB, the European Systemic Risk Board. And I think this quote by Mario Draghi illustrates very nicely how there's an attempt to disentangle these two communications. So this quote is taken from a hearing at the European Parliament in his capacity as ECB president. So he's talking about monetary policy. And he sort of said, I'll say more on these questions during the hearing in my capacity as chair of the ESRB. So, separating these things, I think, is helpful. Now, again, how can we apply these things to macroprudential communication? I think there's a lot of things that are in common. There's also important differences. Rainer already alluded to this in his introductory remarks. One of the things, for example, I think in macroprudential communication, you might have more instances where you don't want to go out to the public. You might have more confidential communication. So I think this is fundamentally different. The objective is much more complex. The governance is much more complex. The set of tools is much more complex. So if monetary policy communication is hard, I think macroprudential communication is likely even harder. And it's also even harder to research that because it's not so obvious what you're looking for. So I had a couple of points about communication with experts. What can we take there from macroprudential communication? I mentioned how central banks were really trying to be clear about their reaction function after coming out of the forward guidance period. Again, I think it's important to the extent possible to reduce uncertainty about the own behavior of the policymaker. I also mentioned this thing that, if you put out disagreement, putting out different views, I think is important, but putting out disagreement or maybe even having a cacophony, I think it's difficult. It weakens the policy impact. So how can we communicate the diversity of views, in particular, given that there's many different stakeholders in macroprudential policy, but do so in a structured manner? And then, communication about uncertainty is something that central banks in their monetary policy sphere are really thinking hard about right now. Here, I would actually turn the question round, right? We were assigned to think about what can macroprudential policy learn from monetary policy communication. Here, I think it's the opposite, because communicating uncertainty and risks is really at the core of macroprudential communication. So I think we can learn a lot from how this is dealt with in that sphere. What about the general public? Well, I mentioned, the general public has little interest, little knowledge, hard to reach, holds mistaken expectations. Trust is important, but it's easily lost and hard to regain. And I think it will be even harder to maintain going forward. So what are things that central banks could do? Well, we know from research that financial literacy is important here. So if we can go out and strengthen financial literacy, people understand a little bit better what both monetary policy and macroprudential policy is about, I think that would be really important. I don't think we want to go too far. We should be humble here. We're not ever going to turn the general public into a bunch of experts. We should just think about what are the basics that we should get across. So I'm not sure the general public will ever want to know the current countercyclical capital buffer implementation. But, educating them about foreign currency loans and what this implies for their own risk, for example, I think that is something that will be really important. So be humble. They will not read the FSR, at least not most of them. But, there's important lessons I think we can get across. If we do so, use simple and relatable language without oversimplifying. Again, there's a lot of research which shows that. And then the last point I have here is monetary policy communication research has really made a leap forward in recent years, because we now have tools that we can use to run causal studies. And these are consumer surveys where we run randomized control trials, or RCTs, or we can ask them hypothetical questions. A lot of this is happening in the research on monetary policy communication. I think this is really something that we also want to use more in macroprudential policy communication. Let me just end with this quote from a paper of ours that again discussed communication about monetary policy, where we sort of ended by saying, well, the potential benefits from more and better central bank communication with the general public are important enough that central bankers should actually strive to achieve them. It won't be as easy as educating the markets, and there will be many failures along the way, but the journey is worth the effort. With this, thank you.
Thank you very much, Michael. And now we turn to Davide.
Great. Before starting, let me thank the organizer for having me, and I was honored to participate in this very exciting workshop, and also being associated somehow to Michael Ehrman, who is the very institution in central bank communication since I started working on this topic. So I want to start my presentation with a few quotes, just to give us an idea of how central bank communication has evolved over time. We started with the idea that central banks should never explain and never excuse. And then starting from the 80s, well, there was the idea that central banks started to ask, should we communicate? And one of the very first revolution that took place in central bank communication started basically in the 90s, when central banks started to recognize the importance of communication. And therefore, the original target was the financial markets in general. And then starting from the post-global financial crisis period, we have seen that central banks, as already Michael mentioned, started also to try to target the general public. So the first thing we need to ask is why central bank communicate. We have seen in recent episodes of inflation that is important for communication, for managing expectations, and also expectations not only about inflation, but about financial stability. And if we ask, why did central banks start to communicate? Well, we have seen in the late 80s, early 90s, that central banks have become more independent. And with more independence, you need to safeguard your independence, and therefore you need to become more accountable and transparent. And for new institutions especially, it's important to establish your credibility and trust. So when we think about central bank communication, there are a multitude, especially monetary policy, and then I will give you some example of what happens with macroprudential policy. But monetary policy communication, we know that there are many formal tools that are typically used, going from press conferences to statements, speeches. Some of these events are recurring, some are not, can take place randomly. But as Michael mentioned, there are some more high frequency or trendy patterns. For example, central banks are now more engaged with social media and educational outreach. And if you ask, are central banks involved with the media? So this is a table from a paper of mine with co-authors, where we basically look at whether a G20 central banks had Facebook, Twitter or X, and LinkedIn account. And we basically find that almost all of them, they are engaged. They have a certain size of the population that follows them. And think about when Michael mentioned the target of the general public. We know now that when Facebook started, was targeting an average audience. Probably now Facebook is more for an older part of the population. So if we want to attract a younger, the Gen Z, probably we will have to move on to Instagram. And that's why many central banks have now official Instagram. I checked before this presentation, there are at the moment no G20 central banks who have a TikTok account, but this maybe, I can imagine that this might be the tendency to attract and engage with the new generation. So when it comes to monetary policy communication, There are various instruments that can be used, but when you think about the research on this topic, we know that most of the literature, especially the academic one, has focused on identifying a causal link between central bank communication and potential effects on financial market. So starting from the seminal paper by Gurkainak and co-authors, they actually find that not only the announcement of the change in the key policy rate, but actually the content of the statement can have an effect on financial markets. And it doesn't have only an effect on our returns, but actually on volume as well. And thanks to the improvement in text analysis techniques, or what I call here computational linguistic techniques, we know that we can nowadays, in an easy way, understand potential hawkish and dovish approaches and build indexes of hawkish and dovish attitude, but we can also build an index of trying to understand whether there is a shock to forward guidance or expectations by central banks. And all of these influence financial markets. However, in recent years, what is emerging at the moment is that the literature, which is, I don't want to say saturated, but there is extensive literature on monetary policy announcement, is also focusing on speeches. We know by now that speeches, for example, by the chair of the Federal Reserve Bank have a larger effect than many monetary policy announcements. And a paper that was released 1 month ago by some co-authors at the ECB and together with Gurkainak and co-authors, they actually show that even in the case of the European Central Bank, speeches have a similar effect to monetary policy announcement. But there are other research. For example, the last paper is a project of mine with some co-authors where we try to understand whether central bank speeches focusing on other topics can have an effect on financial market. And in this case, we look at whether focus on climate-related financial risk in central banker speeches can have an effect. And what we find is that basically, whenever central banks focus their attention more on climate-related financial risks, typically we experience higher return for greener firms as compared to dirty firms. And but then there are some tools that have been very established and they are very used to use by all central banks around the world right now with very simple Python code. And one of the most standard measures that is used in this literature to understand how the central bank statements and documents can be read is this readability index. So there is a well-established Flash-Kincaid grade level measure that tell us about how many years of formal education will be needed for an individual to understand central bank communication. And here I did an exercise by looking at the monetary accounts of the ECB and the press conferences. And we see that for the monetary policy accounts, since they were introduced in 2015, there has not been much of a variation in the evolution of this readability. However, quite surprisingly, and probably also with the idea of the ECB to reach out to the general public, we see that starting from the post-crisis period, the readability of introductory statement by the ECB is now more easy to understand by the general public. Michael and co-author has also shown that during period of uncertainty, there is, especially during the global financial crisis, there is an increase on forward-looking statements or words that are more forward-looking. And I did a similar exercise to look at the statement, the introductory statement by the ECB and the monetary account. And we clearly see that forward-looking statements were probably less needed in 2018 or up until 2019, but we see that in any turning point similar to what we had during COVID and also the tightening and loosening period, whenever there is the need, central banks' communication become more forward-looking to reassure the market on the future path of monetary policy. So what can we learn from the literature on central bank communication? Well, communication is now fundamental for monetary policy, especially during a period of crisis and when we are at the zero lower bound, and is very standard and consider a way to go. The content matter. is not only the announcement of the policy, but also the way the policies is communicated that is fundamental. And here, when we think about the content, also the simple measure of clarity are fundamental to understand whether the general public can understand, or even financial market can understand. And so in this case, I use the difference between the wherever it takes and the taper tantrum. In the wherever it takes, it was a clear and simple message of the determination of the European Central Bank to do whatever it takes to save the euro, while in the US, we have seen that the uncertainty about the taper tantrum had actually a backfiring. And then we have also the idea that the messengers count, in the sense that if we want central bank communication or macroprudential communication to be more effective, potentially this should be delivered by a speech of the governor of the central bank rather than an external board member. And the overall conclusion that is similar to what Michael has said in central bank monetary policy communication is that public engagement remains art, despite the potential channel that central banks are using. So I see that my expectations in the next probably 10 or 20 years, there will be more and more studies, mainly on speeches and on public engagement with different channels of communication. So let me now transition to what we have learned from central bank monetary policy communication and macroprudential policies. And here I would say that probably the task that anyone working on macroprudential policy communication has is not as simple at all. Because when it comes to the objectives, it's clear that we know that the objective of monetary policy communication is related to price stability. Macroprudential policy, we know that is related to financial stability. And so there are more or less a clear objective, right? But what is the clarity of the target? When it comes to macroprudential policy, there are multiple targets, right? We think about evolving targets over time that can change. When it comes to monetary policy communication, we think that during normal times, we have the key policy rate that changes. So the target is always inflation, and we need to bring back inflation to the target. Which are the policy tools? Well, the policy tools are somehow limited, even if we have seen that during the global financial crisis, they expanded a lot on the monetary policy communication. While for macroprudential policy, we know that there are capital buffers, there are borrower-based policies that have to be adopted. And these, I will focus also afterwards on the differences between this policy and how they can have potential distributional effect. We know that their monetary policy communication and monetary policy in general can have partially a distributional effect, but the biggest effect in terms of distribution is it comes from macroprudential policy communication. And last but not least, in terms of visibility, the success story of monetary policy communication is I can bring inflation back to the target, and the measure is easy to assess. The success of macroprudential policy is invisible, because having a no crisis, it means that macroprudential policy was successful. So the environment in which we can play with macroprudential policy is completely different from the one of monetary policy communication. And so in this context, I think that the audience matter. I took here a quote on the fact that that suggests that the impact of borrower-based measure when they are binding is much more evident to the public at large than capital and liquidity restriction imposed directly on banks. So this tells us that when we want to communicate a change in the key policy rate, we probably change the tone of our context and our message if we use Instagram, Twitter, or the formal channels for monetary policy communication. While when we have to communicate macroprudential policy, the audience needs to have a different message. If we set a new capital requirements, then also the general public will need to understand what could be the potential repercussion of this policy on their mortgage. And on the other side, when there are borrowing-based measures, the general public will need to understand why those policies were necessary and potentially also transfer the same communication to financial institutions. So what is we know that monetary policy communication as evolved is basically focused on changing the key policy rate during normal time and in announcing unconventional monetary policy. But more explicitly, we know that macroprudential policy has this, what I call here, this bimodal pattern, right? During normal times, there will still be financial stability report, but if we ask, is the public interested and are the media interested about macroprudential policy, the answer is no, right? And so what is the challenge in this case that I will mention afterwards is trigger the interest of the individual, even during normal times. So the success story is no crisis event. How can we trigger the interest of the public? And during crisis periods, well, everything is crazy, is uncertain. And so there is lots of communication. And in that case, we run the risk of entering into the sphere of the cacophony, so that too much communication can actually create some tension in the market. For example, if you think about a small open economies where there are 2 or 3 banks, mentioning that there has been, in order to increase transparency of the communication, there has been a bank which receives some support, would actually trigger a bank run. So the line between a bank run and providing financial stability are very thin in that case. So is it true that communication is bimodal? So in a paper of mine in which we expanded the BIS database of speeches by increasing the number of speeches available, also provided in foreign languages that are non-English and more central banks. We did these simple exercises of doing a dictionary, using a dictionary approach, but also using more advanced large language model techniques to identify whether there has been an evolution on the words or sentences mentioning monetary policy tools or keywords. And so what we see here is, excluding probably the first period where there were less speeches, you see that between the early 2000s and the global financial crisis, macroprudential communication, especially in speeches. We know that speeches are not the primary channel of macroprudential policy, but this gives us an idea on whether there is a crisis or not. And we see that macroprudential policy was much more mentioned in governor speeches and board member speeches after the global financial crisis. And now we are in a tendency of forgetting about the importance, at least in speeches, about macroprudential policy. I did a similar exercise by looking, and I said, primary channel of communication for macroprudential policy is not necessarily the speeches or the statement, but here I did the same exercise in looking at the mention of these keywords related to macroprudential policy. And we see that, especially in the introductory statement of the ECB, leaving aside, in recent years, leaving aside the short period of the Silicon Valley Bank, we see that mention on the introductory statement has faded. However, something that is typically connected with what we see, the anticipation of a potential crisis, is the increase of uncertainty words. And we see that uncertainty in recent statement and also monetary accounts is increasing. Part of this uncertainty can come from geopolitical risk and not necessarily from financial stability risk, but at times there is a thin line of difference between the two. So let me conclude with the last 2 slides. What I see about the main challenges of macroprudential policy communication is that there is a more complex audience. It's not only important to reach out to the general public and financial markets, but also the message needs to be different. And so policies can have a direct, if we think about borrower-based measure, or indirect effect. And so this is important for the general public and also financial markets to understand. When we think about, and it was mentioned before by Rainer, in the context, for example, of European bank and national central bank. We know that at the national level, there are also different regulators that can have some way of communicating their concern about a macroprudential policy. So it is fundamental for these policy institutions to coordinate their communication in order to avoid uncertainty. Here, probably a big threat that is considered is central bank involvement in a communication with social media is important. However, here there is a quote that a tweet that was then retracted by an Australian journalist in October 2022, even before the merge between Credit Suisse and UBS in March 2023. And so this tweet basically triggering in Credit Suisse as a large withdrawal of the deposit from that bank. So what we know is that nowadays, when it comes to macroprudential policy, it's easy potentially to have the spread of false news or fake news, and that could potentially trigger a bank run and potentially could have systemic risk for the entire country. And then when it comes to probably the last consideration, thinking about the future, there are certain central banks which are now trying to adopt this digital currency. Probably in the years to come, for those countries those areas like the euro area, where there is the idea of adopt the digital euro, it would be important to understand what are the implications, for example, for bank disintermediation challenges. So just to conclude briefly on the opportunities, we have learned a lot from communication, especially monetary policy communication. It has to be clear, forward-looking. Financial literacy, people, unfortunately, thanks to the global financial crisis, are now a little more financial literate. And what we need probably to do as a challenge for macroprudential policies to make the normal time more interesting. And one example of a story that could be told is it would be nice to, for example, provide also to the general public an historical analysis of what happened with Silicon Valley Bank and, for example, in the euro area, how we managed to contain the stock market reaction of many banks in March 2023. If I remember, after Silicon Valley Bank run, then there was Credit Suisse merge. And I remember on the Friday after the merge between Credit Suisse and UBS, the stock of Bundesbank lost 10% on the fear that there will be a bank run on Bundesbank. But the policymaker at that case, they managed to reassure the market, and it was a successful story. So what have we learned from this will be of fundamental importance. Thanks a million.
Thank you very much, Davide. I don't know whether you can hear this. Yeah, I think so. So can I remind you again to use the Slido tool? I have two questions here ready for the two of you. So for this tool, for this here, you need to switch it on here, this button, push it long. Otherwise, I think you can use also this microphone. Coming? Okay. Looks good. Okay, so the two questions are, and I put them both at the same time, and you decide how you can answer. First question is, could clearer communication of macroprudential intentions help reduce the need for actual policy tightening by influencing expectations preemptively? So this is sort of a job boning in macropru. And the second question is, do you think central banks are hesitant to communicate macroprudential risks too openly because it could make them politically accountable if things go wrong? So I might extend this question. Do you see a risk if macroprudential policy communicates too openly that it might become self-fulfilling and trigger a crisis itself? I think this is an issue that we discussed at a conference with John Fell a while ago. So I leave it at these first two questions for the moment, and I have many more myself if there is time. Michael, do you want to start?
Happy to start. Can you hear me? Does this work? Yeah, very good. Can clear communication sort of avoid subsequent need for tightening, right? That was the first question. I think this is really what macroprudential policy communication ideally should be about, right? I mean, think about stress tests, right? I mean, you do want to sort of highlight, there are certain risks in bank behavior. If they are not addressed, then, that could lead to materialization of financial stability risk, right? But if measures are taken preemptively, then hopefully you don't even get into that situation. So I think macroprudential communication is a lot about trying to change behavior ex ante in order to avoid a financial crisis, and therefore in order to avoid having to actually implement measures. I already mentioned foreign currency loans beforehand. Again, educating the public about the risks of these, I think hopefully can actually make sure that only those people take foreign currency loans that actually where it makes sense for them to do so, and then hopefully the ramifications of things happening would be much reduced. So yes, I think macroprudential policy communication should be about changing behavior ex ante, ideally. Now then, if you talk a lot about risks that might happen, is there whether that could lead to sort of reputational loss, right? And you're going to be blamed for that. Again, my take would be that, I mentioned this before already, I think it's important that we educate the public about the role of macroprudential policy, the role, but also the limitations, right? I think it should be clear that it's not the job of macroprudential policy, or it is not achievable that there will never ever be a crisis or some serious events happening, but sort of getting across, there's an institution that looks into this and sort of telling, the limitations of that endeavor, I think is an important precondition for then subsequently being able to actually sort of keep up a reputation and not being sort of dramatically damaged and losing the trust that I already had put up on the slides.
Thank you, Michael. Davide.
Yeah, I think, so how clear communication, so you mentioned clear communication and its importance. I think also forward-looking communication together with the clarity. And one of the things that has been successful in many central banks, especially on monetary policy communication, is also to provide various scenarios of, or for example, when you, rather than providing the stable point of what could be the effect of the inflation, is showing, for example, in financial stability report, what could be the policy scenario on the case in which things go not in the direction that was expected. And so, for example, showing standard deviation or the fund chart that are typically used in representing expectations about inflation, so that we do understand not only the median point of the distribution of the risk, but also the potential boundaries of this detailed risk that is associated with these policies. Talking about the reputational loss, I think is important, and is probably more important with macroprudential policy communication, that when it comes to macroprudential policy communication, you want to be as transparent as possible, but not too transparent. And the example I provided before is, you don't want in a small countries where there are two banks saying, think about Credit Suisse, if the Swiss National Bank had told, we are providing liquidity support for Credit Suisse, for a bank, for the biggest bank, which is struggling in the country, there would have been probably already in October 2022 a run on the bank. What is important for me is also to, as Michael mentioned, to educate the public on what are the examples that can provide us some good insights. For example, in Ireland, if you want to know something about the economy, you don't go to economist professor. You go to you take a taxi and you ask a taxi driver. And the other day on the radio, there was a discussion on reducing or loosening the condition on loan to value ratio. So bringing back to the 100 or 120% ratio. And basically, the taxi driver that brought me home was telling me, look, this is a policy that now politicians are talking about, but these politicians, they have short-sighted ideas, because what we know is from the previous crisis is that this policy will conduct to a, rather than a decrease in housing prices, a further increase in housing prices. So the part of the rhetoric on telling the story, economists like a lot, at least in my case, historical facts. And so educating the public of what went wrong, for example, during the global financial crisis or when there was a housing crisis, would also have some repercussion on educating the public. And so the reputational loss in this case could be much smaller.
Thank you, Davide. So you met an obviously very financially literate taxi driver. Admirable. I have a whole bunch of questions here in the Slido. I try to cover as many as possible. So could clearer communication of macroprudential policy intentions, no, sorry, we had that. Do you think central banks, no, for Mike, sorry. I'm having difficulties with this. For Michael, you said keeping monetary policy and macroprudential communication separate is important. But should these policies not be coordinated? Then another question to Michael or Davide, or both. You explained how difficult communication with the general public can be, but why should we care? Why invest our limited resources into something challenging and uncertain? After all, 99% of the population contributes less than 50% of price decisions. Okay, so pretty utilitarian approach. Then another question, how do you communicate to a group that falls in between experts and general public, like businesses, politicians who are powerful, particularly if they are clearly affected negatively by the new policy? So how to convey unpleasant messages? I think I'll leave it at that for the moment and ask again, Michael. Oh.
Okay. Yeah, a lot of questions. Thanks a lot. So the first one was on, should macroprudential and monetary policy be coordinated while you keep communication separate? Again, the point I made really was about communication. You want to make clear that, you know, even if it's the same person, that person has two different assignments, and at times there might be actually tensions between these two assignments, and so you do want to separate that space, right? So as sort of the role of the chair of the ESRB, I might have a different message, and I don't want this to sort of affect the reputation on the message of the head of the monetary policy setting council. So I think that is important. Of course, these policies don't act in a vacuum, right? I mean, in preparing monetary policy, I mean, there's a lot of emphasis given on financial stability implications of monetary policy, and again, also what is actually the macroprudential current environment and conditioning on that, you know, what are possible monetary policy actions. So clearly, you know, one policy needs to be aware of what the other policy is doing. It needs to be aware of the implications of its own actions on the other policy. And at times there might be need indeed for coordination. So yes, I think these things are hopefully can be combined. You can coordinate and you know, talk to one another, but separate the communication. Why do we care about, you know, communicating to the general public in the first place? Well, I think for several reasons. Partly because the actions of the general public might have financial stability implications. I mentioned this example now the third time, foreign currency loans. I think, you know, that was a clear example where the general public sort of was running into, you know, individual risk and possibly a macro prudential risk. So you do want to educate people about this. Deposit insurance is another one, right? I mean, educating the people about the situation in your country with regard to deposit insurance, I think is important. It's you know, if people understand that, you know, it can shield them from actually incurring losses. So I think it is a worthwhile communication audience. However, not for each and every type of communication that we make. That's why I also mentioned, the more technical things that are really addressed to financial institutions, for example, countercyclical capital buffers, right? And I don't think this is something we do need to communicate to the general public. Beyond the message, there's an institution here that is in charge of these policies. And so the groups in between the general public and the experts, well, my take would be here that groups that are sort of the target of macroprudential measures pretty quickly become experts in the sense that they have an own interest to actually follow these communications, right? So if you want to take up a mortgage and there's a loan to value ratio, you will learn about these macroprudential policy measures, right? And then this is obviously easier to reach that part of the communication. So in that sense, I would think groups that are affected by macroprudential measures can be reached. And so this main difficulty in reaching out to the general public at large is no longer that binding there. I would leave it at that.
Thank you very much, Davide.
Yeah, so regarding financial markets dominance, I think for macroprudential policies is even more important, the communication. Probably I mentioned before the SVB case, and the SVB case was one of the typical or the first social media driven bank run. And we know that also based on GameStop and what can happen in financial markets, by looking at social media, we could potentially trigger a bank run in the future. And so it's important for the general public, assuming that the general public also include those who use social media. We know that educating these individuals is of fundamental importance, because especially for macroprudential policy, they can have an effect. And at the same time, I see this point of educating the public very strictly connected with how we communicate unpleasant news to the politicians. At the end is the general public that has a large share of the votes. And potentially we have seen in recent years with all the pressures on central bank about their independence or their policy, understanding why certain debt-to-income ratio or loan-to-value ratio are important and why we want to avoid housing boom and housing burst is fundamental for understanding and communicating these policies.
Thank you very much. I have a interesting question here in the list regarding oversimplification. So you mentioned oversimplification of macropru policy. Well, I have to tell a story first. We had this regular meetings in our central banks, and I, as a macroeconomist, monetary policy economist, was totally overwhelmed by all the abbreviations used by the banking supervisors. I'm sure the banking supervisors have the same problem with us, monetary policy economists, but can you also oversimplify? What would be an example of oversimplification?
Yeah, so this relates back to what Davide has already put up on the slides, right? I mean, there's lots of central banks are now looking into the readability of their communications in the monetary policy sphere, right? So one of the measures that you put up is this Flash Kincaid measure. That is a very simple measure in the sense that it just sort of looks at how long are the sentences, how long are the words. I think we need to go beyond that and to think about how can we reduce jargon, right? Because we tend to use both in monetary policy and macroprudential policy very, very complex words, abbreviations as well, but I think that's more sort of in the inner circle. But that is clearly something, can we explain in words that mean something to people? Again, without sort of losing the making sure that what we still say is correct. But let me give one example of the risks of oversimplification coming from monetary policy communication. Things like forward guidance or releasing the inflation projections, right? it's very difficult to communicate the conditionality of forward guidance. It's very difficult to communicate that the inflation projection has massive uncertainty bands around that. Actually, already if you see how this gets sort of taken up by financial markets, they keep focusing on sort of the central path, whether that actually gets published by the central bank or not, right? Even if you only publish the interval, people will take the middle of that interval, right? This is what financial markets react to. And if you emphasize these things because they are simple to communicate, I think there's a risk that you don't do justice to the uncertainty that you are facing yourself, right? You do want to communicate, this is our best sort of current projection, but be aware there's massive uncertainty around that. And again, forward guidance was a good example for that, in the sense that central banks always had this sentence on conditionality. In many countries, this was not really reported in the media out to the public, and then people just took, okay, interest rates are going to be low for very long. It's fine to take up a mortgage, and then of course central banks actually opted to take the conditionality and started raising interest rates much earlier. So I think this is a clear example where oversimplification was a problem, not necessarily in the communication of the central bank, but then at least how it actually got communicated to the general public.
May I follow up a little bit before giving the word to Davide? So you emphasized 2 times now in your various responses the importance of admitting the uncertainty. Now, you could also hold against this that a leader, a policymaker, might need to pretend that he knows what he is doing or she is doing in order not to create additional uncertainty. So what would you hold against that?
Right. So, no, very, very fair point. So what I tried to put up on my slides was, I think there's 2 dimensions to this. So if the economic situation is uncertain, and currently, I mean, there is massive uncertainty out there, I think it's important to acknowledge this. This is nothing the policymaker can influence, right? But then take that uncertainty and reduce the uncertainty about how you will react to this to the extent possible. So yes, we live in a situation of high uncertainty, but we are taking this into account, and here's my reaction function. Here's how I would want to react in the different contingencies. So scenario analysis is one example, right? How would my interest rate response, my monetary policy response look like in various scenarios? So trying to reduce the type of uncertainty that is actually under my control. Don't sort of go out and sort of say, well, the uncertainty is so high and I really don't know how to handle it. No, but having said that, uncertainty is high. We are operating in this environment. So I might be sort of, again, in the example of forward guidance, I might be sort of telling you what I plan to do going forward. But there might be instances where I might deviate from what I'm currently saying because I know what I do.
Very good. Thank you. Davide.
Well, if I think about oversimplification, I always think about all the terms used by the European Central Bank to talk about the quantitative easing policies. So I think we are far away on that side on oversimplifying the term. I think you always have a good compromise between making things clear and oversimplifying, because we know right now that when I show the evolution of the readability, I'm happy to see some variation, because what we need to think about, even on financial market nowadays, is that it's easy to use text analysis techniques by algorithm. And as soon as there is a communication that diverge from the usual one, so if communication becomes readable at the same level, and then from one day to another there is a shock, then the market or the algorithm could actually overreact. And so the risk of oversimplification is having overreaction when things change a little. So probably there is a good compromise between making things clear but not too clear, and leaving some of the weight on forward guidance, and mentioning, as I said already, some scenario analysis.
I think you have noticed that I take many notes. So the more questions you give, the more answers you give me, the more questions come to my mind. So let me conclude this session with 3 questions, and you might answer briefly, not to shorten the break too much. So the first one is so reaction function approach in monetary policy is, you know, the latest fad. We're all for that. So what would be the equivalent in Macroprudential? Because it seems complicated to me. Maybe you have a good idea on that. Then, Davide, you distinguished, interestingly and importantly, between normal and crisis times. Now, this not only applies to financial stability measures and communication, but also to monetary policy. And if all of us remember crisis in the last 20 years. So it seems to me that in a crisis, both the tools, the measures of monetary policy and financial stability measures, and therefore also the communications sort of, they collapse, they fall together, they become one, they become more integrated than in normal times. So would you agree with this, or what's your take on that? And then the last question is, you mentioned scenario analysis. And from Macroprudential, we know stress testing. Now, interestingly, I haven't seen scenario analysis used so much in Macroprudential, and I haven't seen stress testing used so much in monetary policy. But the two are different. So what scope is there for mutual learning?
You want
Davide, do you want
to start from this? I need to think a little bit more.
Well, I think I will start with the last one.
Yeah.
I think, and going back to the global financial crisis, I remember when the ECB released the stress testing on some Italian banks, and I remember the stock market reaction. So I think there is lots to be learned more from the monetary policy communication from than for macroprudential policy. Probably in this case, this is an example of I mentioned already scenario analysis, trying to understand what could be the future path. And in some cases, it's missing also in monetary policy, even in the accounts of discussing what could be the future path of policy, or at least they are probably available at the National Central Bank and the ECB. But for example, in the US, there is Freedom of Information Act, and people can assess the various scenarios provided by the Green Book or the various version of the Green Book, which are not accessible to the general public. So it will be useful already to make this information available. Is there a reaction function in macroprudential policy?
Can it be formulated?
Yeah. Well, I think the reaction function for monetary policy is much easier to understand. The one of monetary policy, macroprudential policy, probably there might be multiple, but
because of the multiple instruments.
Of the multiple instruments, and so probably also in that case the communication of why we decided to go for borrower-based measures rather than capital buffers might be of fundamental importance. But I think having the stress tests on this direction will be also important. So I think I don't recall any example of thinking of what could be a reaction function for macroprudential policies, because there are too many players at stake. Well, I don't want to say that monetary policy communication is too easy in terms of objective, but the policy targets are too many for macroprudential policy. So I don't think, or at least based on my experience, it might be difficult to design a reaction function for macroprudential.
Okay. So I see potential for a working group.
Oh yeah.
So maybe let me add to that. You call reaction function the latest fad in monetary policy. Well, it's reoccurring, right? I mean, the reaction function was always a very central part, and I think exactly because monetary policy in some sense is much simpler, right? I mean, you can, there's things like Taylor rules which very simple concepts that describe pretty well, there's different variants of it, but describe pretty well what the central bank is doing, because it has a clear target, has a clear instrument. This has become a lot more complex now with different tools at hand, right? So, and this is what I also put up there. I think one of the complications now is how can you communicate a reaction function given that you have different tools? You also need to sort of say, when are you going to use which tools, right? So it makes this thing now multidimensional, and this is clearly much more complex in macroprudential communication. So I don't think we will, not say ever, but soon get to a situation where we have sort of the equivalent of a Taylor rule for macroprudential policy, which very easily describes what macroprudential policy will do. But again, getting some clarity on which tools are used when, what are sort of the variables that we look at. And I did mention already, there's a lot of emphasis on putting the data out there. The ESRB has a data dashboard there. So it helps understand, what are these variables that go into my decision making, being clear about that without sort of specifying now a lambda on a specific parameter. I don't think we will get there anytime soon. So hopefully that can help. And this question on the difference between scenario analysis and stress testing. So I would say there's a fundamental difference here in the sense that scenario analysis is the monetary policy maker tries to explain, again, there's uncertainty out there. We could go on one trajectory or another one. How will I react with my policy when these scenarios materialize? Whereas I think stress testing is, as I mentioned before, ideally you do this ex ante, and it's sort of a communication device on how other actors should act depending on various scenarios. So underlying is the same idea, right? Different things can materialize. And the idea for stress test is, how is this going to expose a certain bank, and trying to sort of communicate, that would imply taking certain measures. So it's not about the policymaker's own behavior, right? Whereas scenario analysis, I think ultimately the idea is, if the economy evolves in different ways, how will I react, right? So I think there's a sort of a different ultimate objective to these two things.
So thank you to both of you for your extremely rich presentations and the very open discussion. This was really helpful. I think it really provides a good basis for the remainder of the workshop. And I'm sure that we're gonna pick up some of the notions and ideas and questions that we raised here also in the later parts of the workshop today. So thanks a lot. We break here for coffee, and please be back at 11:30. Thank you so much.
Please be back at 12 o'clock. So
oh yeah, so
it's
sorry.
half an hour right now. But many thanks. So there is refreshments outside where you were before. But for the speakers and moderators, please could you assemble here briefly for a little family picture? Thank you very much. All right, so welcome back to the second panel. As I said, the bar is pretty high after the first one. So now, but we will surely rise to the occasion. So let me give you a little bit of background to this second session. So this is very much focused around a paper that was initiated by Piroshka Naj-Mohashi, who is now at the London School of Economics, and it became a cooperative work between her, Tatiana Evdokimova, from the Joint Vienna Institute. There's another link with the JVI here. Then Jan Klatcho. Jan, where are you? Man directing from the top. Then we have Olga Panamarenko from Caplight, and myself also made a humble contribution to this work. So we'll start with this. Piroshka and Tatiana will take the presentation. They divide it between them. And then afterwards, we have 4 different presenters here. And the selection of those presenters is very much also guided by the paper, because the paper looks at macroprudential central bank communication on financial stability in the Visegrad countries. So Czechia, Slovakia, Hungary, and Poland. And we have 3 of these countries represented here. So on my left is Adam Banai, who is executive director at the Hungarian National Bank, Marian Nemzeti Bank. Then we have Markus Schweiger. Markus Schweiger is director of the Financial Stability and Supervision Department these days, right? You have 2 hats that you have to wear simultaneously from the Austrian National Bank, Österreichische Nationalbank. Then my very dear colleague, Marek Ličak, Director of Financial Stability at Národná banka Slovenska. And last, certainly not least, we have Adam Gerschel on my right here. So Adam is currently with Charles University in Prague, but he used to work for the Czech National Bank for some years, and also we used to work together at the Joint Vienna Institute for some years. Right, so we start with the presentation, then we have the 4 comments, national presentation, so to say, and then afterwards we have 20 minutes of general questions and answer. And on that, the floor is yours.
Good morning, good afternoon, kind of we are in the middle. Thank you very much, Rainer and Jan and the National Bank of Slovakia for inviting us and myself. And thank you, SUERF, for a wonderful co-organization of this conference. As you have heard, we have a collaborative effort here to present to yourself about 5 country cases. We look at this workshop as a source of inspiration from you. We present where we are. This is a work in progress. So we are humble as much as possible, but also quite devoted to the subject. We are devoted to the subject for all the good reasons that in the first excellent panel you have already heard. Why, although complex, it is so important to focus on communication on what I'd like to call financial stability and not macroprudential. You know, let's start from the beginning. That's a jargon. If you say macroprudential, half of your audience, not here of course, but if you speak on an academic conference, goes to sleep. And I guarantee you, if you ask in a survey, you know, what it means, macroprudential, most of the population will not know. Financial stability, risks in the system, in your banking system, in the non-banks, in the emerging digital currency, that's what matters. So we have actually, can I say that, Rainer, we have struggled with the title, and I think I won on that one, to have, you know, financial bank on financial stability. This is an AI text analysis, now turning back to serious presentation, of financial stability reports using text analysis. The motivation, I really don't have to go into details. You already heard from the first panel much more than I would be able to describe. I just want to stress a little bit. I think at least our group felt, research group felt that it's an important motivation also to look at the coordination, possible coordination of monetary and financial stability, macroprudential stability, communication. Can be separated, as Michael explained in the first panel, but it's super important to coordinate the message. If you don't, then you end up, not only, but partly as a factor, you end up like the US did in March, April 2023 with the Silicon Valley Bank and alike crisis. Our objectives, so we have one major objective to develop a method to look at financial stability sentiment analysis, what the central bank communicates on financial stability, macro-pru. Another objective already in this first round of research is to assess a communication consistency between these 5 countries where Austria, the OENB, is Marcus here on the panel, is the home supervisor still of many of the banks in the countries in the region, Poland, Slovakia, Czechia, and Hungary. These are the so-called Visegrad countries. This is what we term it in this region. We do have further objectives. We are at the beginning of investigating whether communication on financial stability, Macropru, is really related to policy action. There is a lot of obstacles, challenges in this area, as we already heard in the first panel. But there is some good already solid research, particularly something that Rainer and his co-authors developed earlier, and I will be alluding to that. I understand that from colleagues from the GVI course, actually yesterday you got a full presentation on this issue. We also draw on our own, with Tatiana and the other two colleagues, research on communication and monetary policy in emerging markets earlier. We start with a small group of countries just to test the methodology, get your input, and then further on. It is a hard nut to crack. We already established that. I am not going to explain why. We had the definition problem, the framework problem, more than one authority in several countries. It's relatively new. I'd like to add one more point here. That is, political economy-wise, it can be quite complex also to communicate on financial stability. A little bit following up on what Davide said in the first panel, there might be a bipolar model of that is in the past of financial stability communication, but that might be a little bit of problem, because often public perception when asset prices are increasing and booming, your house prices are rising, is positive. Prices are rising, stock market prices are rising, so things look good. But this is exactly, as you know, you who work in this field, when certain risks can build up, right? Too much credit to household, too much mortgages to households, and the form, not to speak about corporate risks. So exactly when times look good to the public, you have to communicate hard stuff, hard truth, and more frequency. So it's really going against what this bipolar model of the past would perhaps suggest. Now, our methodology, we will have 5 steps, out of which we show you 4. The third one is just a robustness test, and we don't have time for that, but happy to discuss if further interest. So in step 1, we identify the key financial stability concerns in this region. 5 areas: banking sector resilience, commercial real estate, domestic economic developments, global economic developments, household indebtedness, residential real estate, sovereign risks, and the like. Tatiana will go into in detail, so I don't have to. And particularly, she will explain how we asked ChatGPT to assign a topic to each of the sentence in what is our subject matter, is the executive summaries of financial stability reports of the central banks. And this gives us the structure of the executive summaries by topic. And then with our own method that also she will explain in detail, we will identify the sentiment, the sentiment that central bank through its communication on these 5 big topics communicate to the audience. Then we sum up the scores and present the total score, which is the total overall sentiment conveyed by the central bank or the competent authority on financial stability. And then we have the robustness test, which is doing the, and I'm sure that most of you are familiar. It's also doing this work on the more traditional dictionary approach of tax analysis of monetary policy statements. This applied to Macropru, and that actually confirms what we find with ChatGPT. Our country coverage, as already said, long time series as much as we can. We have used only central bank communication. Again, you know, the executive summaries of financial stability reports. Even though in 2 countries in our sample, there are multiple regulators. Marcus, in an earlier workshop, very kindly guided us to look at the Financial Stability Board's communications, and we did. And for reasons of a very different nature of that communication, from comparability in this round, we have not included into the Austrian overall communication that source of information. It's something that probably we will be tested against here. And in Poland also there are multiple regulators. We hope that we capture from the communication of the central bank what is the essence of their thinking. So we will go through these steps now, starting with the executive summary decomposition, and I think here is when I'm asking Tatiana, who is one of the lead co-authors here, to continue on the methodology.
Thank you. So I will continue where Piroshka stopped and give you a bit more insights on what exactly we were doing. So this core part of the presentation now is about how we constructed the sentiment of the financial stability conveyed in executive summaries. So the first step to do this was to decompose the executive summaries into the topics. So what are the executive summaries talking about? To this end, we used ChatGPT. We give the whole prompt here. It's very long and explain why. But basically what we asked fundamentally is classify each sentence of financial stability report into one of these topical areas. Why the prompt is so long? Because chat needs a lot of context. So what exactly are we analyzing and what do we understand under sovereign and geopolitical risks, for example, or what do we understand under banking sector resilience? That's why we need to explain all that. So once we categorized all the sentences into these topics, we ended up with charts like that, where basically we can see what is the structure of financial stability reports executive summaries. So what is visible here is that major part of financial stability reports executive summaries is focused on banking sector resilience, so blue parts of this charts. And this is probably not surprising given that the systems in the region are bank-based. But then also some other things that we observed was that there was growing emphasis on, so the pink parts, this is what corresponds to household indebtedness and residential real estate. So there was growing emphasis on these topics. However, this probably is linked to the fact that countries in this region were facing increasing mortgage lending, but also price increases on the residential market. So that was gaining more and more attention. Also, the orange parts, this is about sovereign and geopolitical risks. So they were more visible around the time of European sovereign debt crisis and also later given the geopolitical context. So, but this was just, the first step because we needed to have the data which we work with. Now that we know this sentence belongs to this topic, we can analyze what is the sentiment that is conveyed in this sentence. And so then we moved, okay, so this is the conclusions which are on the I covered pretty much that on the previous slide. But so then once we had the classification of all the sentences, we used ChatGPT to assess what is the message that the regulator is conveying on each topic. And so for each sentence, we were using ChatGPT to now analyze whether the regulator is conveying more or less concerns about, let's say, banking sector resilience, or whether it's communicating more or less concerns about residential real estate market. And so again, this is the prompt that we used. It's long, but fundamentally what we are asking is whether the sentiment is conveying more concerns or fewer concerns. Why is it so long? Because if you just ask ChatGPT like this, is it more concerns or less concerns? It will give you not very good results because it's not knowing a lot of context. So we needed to work a lot on this prompt, describing what exactly do we mean by negative and positive, what exactly do we see as risks. And this was an iterative process. We ran analysis once with the simple prompt, then we manually check what is the classification, then we disagree, we see some systematic errors. We change the prompt so that we explain, for instance, that higher prices or the message about very high prices is more about risks rather than some positive development. And then once we do all this fine tuning, at some point we are happy with the result. And so we have each sentence classified as to whether it conveys concerns or it's vice versa optimistic. So then each sentence gets a score, 1 if it's more concerned, -1 if it's less concerned, and 0 if it's neutral. So then with that, what we can actually do is that we can build financial stability sentiment. So what exactly are central bankers saying about financial stability, and decompose it into contributions of concerns in each of these areas. So what was on regulators' minds in each period. And so we will show the charts for each country of what were the evolutions of these indices and what was driving these indices. And essentially each score, also the scores across sentences, are summed and normalized by the total number of sentences in the text. And actually the index then evolves from 1 to -1, 1 being very concerned and -1 being very unconcerned. So now to the results. First, I show sentiment by topic for the whole sample that we had. And here, so you have these 5 topics which we looked into, and you see the dominance of red, which means that majority of sentences are actually speaking something negative, right? So some concerns that are being raised. And we think that this is quite natural because, as was also flagged during the first panel, the job of the regulators is to flag risks. And so the communication is inherently biased towards this risk communication. And the highest bias towards risk is for the 2 categories, which is sovereign and geopolitical risk, and also global development. So policymakers view this as primarily sources of risk. And when it comes to banking resilience, this is almost an outlier here. And actually, we saw that a lot of sentences are simply just describing what is happening in the banking sector without giving any assessment of whether it's positive or negative. And this was systematically so across periods. And so this was the chart for the whole period, but also we looked by component at different periods. So pre-global financial crisis, then post-GFC euro area crisis, pre-pandemic, pandemic, and post-pandemic. And so what we see is that this is the last one is for the total index, and each of these other charts is for different parts of the index. So we see that prior to the global financial crisis, there was like lowest level of negative, and then we never got back to this level, and the highest concerns were, of course, during the period of global financial crisis and euro area crisis. Interestingly, during the pandemic, there was no such spike. So how we read this is that probably policymakers among monetary authorities and fiscal authorities actually reacted quite fast, and there were also a lot of liquidity provisions that helped to alleviate pressure quite quickly, having the memory from the global financial crisis. But also there was a lot of effort to develop a macroprudential policy toolkit since global financial crisis, and again, maybe that gave some comfort that banking sector was pretty resilient. But also what we see is that commercial real estate is becoming increasingly skewed towards negative assessment. And then banking sector resilience across periods, it's least negatively assessed, while global economic developments and sovereign and geopolitical risks are always very, very skewed towards negative assessment. So this was just our take on the overall sentiment, but then again, these are the trends which I covered while commenting on the charts. And so here we come to finally the charts which we have by country, and I'll just explain how to read them, and then we'll get back to Piroshka with the comments. So for each country with our methodology, it's possible to build such charts, which essentially convey the communication about financial stability. And so when it's positive, it means that there are concerns about financial stability. When it's negative, it means there are like something positive actually communicated about financial stability. And so the line is an overall index, and the bars are the contributions of concerns coming from each area. And the index, as we said, it will vary from -1 to 1. So that's, I think, how you can read this, and I'll pass the floor back to Piroshka.
Thank you. I think beyond the beautiful technicalities that only Tatiana can explain, I'm learning from her every single time she speaks about this. Here, when the fun starts. So we go country by country and look at this overall, I don't know whether it has a, okay. Overall sentiment. So you look at the lines. It starts from the 2000s for countries as we see as recent as we could get, end of 2023. Tatiana already explained, if it's net positive, line is above 0, that you see the vertical 0 in the middle, then it conveys a concern about financial stability in net terms. If it's negative, then it conveys some relaxation. So no major concern, sort of relaxation by the regulator. We also have by topic. So say before the global financial crisis, in the case of Hungary, there was some concern, and it was mainly by the, I think it's pink denoted household indebtedness, rightly, that driven this, and global economic developments denoted by green. There was already some concern, but not too much on banking sector issues, resilience, systemic risk of the sort. In the chart, we highlight 3 periods. 2 periods, but it should be 3, as I was just saying in my mind, I think in the next round, if you agree. First, obviously, the global financial crisis. And we have to say that, as you know, before the global financial crisis, there wasn't too much macroprudential regulation to speak of. So there was some communication already, rightly, but not really a framework as what was then developed in response to all the shocks and problems coming or were behind the global financial crisis. Then the whole macroprudential framework was developed through the 2010s. So that is become more and more relevant because then it become more seriously regulated. But really, the system was in place. I mean, I'm deferring to those who really know, Michael, John, and all the others here, that the system was placed by basically before the COVID pandemic. Then the pandemic hit, and that was a very unknown risk, as we remember, with lockdowns and all that, to which policymakers responded with a coordinated policy of relaxation, expansion, fiscal, monetary, and macroprudential. As we know, there was a lot of relaxation of the already sort of approved macro-pru regulations. And the third period, I think, and I would argue is the single most important one to test the whole communication and the framework, is how central banks, regulators dealt with the inflationary period from 2021, 22, 23 that followed the COVID period. We don't have it highlighted. I think we will have to, because what you see in the case of Hungary, and focusing on that, given that the system developed by that, by that time, there wasn't too much concern during the strong shock of COVID. In fact, the line dips below zero. Sort of the regulator wanted to probably assure the public. We will hear from Adam, who knows much better. But then, as the energy price crisis hit, Russia's war on Ukraine, etc., then the regulator got concerned, and that's what you see, the spike in 2002, 2003 in the conveyed sentiment, net concern of the central bank MNB in Hungary. So I think
Piroshka, so
yes.
it's just about 10 minutes for the
okay.
remainder.
So this is what we do. Overall, we have also Chechnya. Again, the system is in place gradually by the time of the COVID. But what you see here, what is interesting in the case of Chechnya, is that from basically the start, when before the global financial crisis, the regulator in net terms is always concerned with different volatility. So very concerned during the global financial crisis, very concerned during the Russia energy price crisis 2002, 2003, and in between still conveys net concerns all the whole period, as Tatiana said, and we see an inbuilt maybe natural bias of the regulator to err on the cautious side to avoid, for whatever reason, let me not justify. There is some concerns by the end of the period. We don't have time, I understand, to go over the details, on some concern on commercial real estate already in the Czech case. In the case of Slovakia, we will hear from our hosts in more detail. It is very similar in terms of the net sentiment communicated by the central bank to the public of concern, net, not huge, like we have the GFC spike, but then we have the Eurozone, that crisis over obviously some concerns, there is some volatility that eases. But I think the main message is that there is a general, alertness communicated, and we see also an increased attention communicated to commercial real estate, just as in the case of Chechnya. In the case of Poland, we have a different pattern. Again, the system is not in place, so let's keep it in mind until at least the middle of the period. But we see that based on this incomplete set of communication and framework and tools and everything, before the global financial crisis, actually the Polish regulator was relatively relaxed. So unlike Hungary, the Czechia and Slovakia, there was not too much concern about the banking sector resilience, as it actually could have been, you recall. As Michael also highlighted, the FX risks particularly that were rapidly building up in this region and then were exposed during the global financial crisis. But that was not captured. Then also quite a lot of, ease communicated during the 2010s, but then a lot of concern during the lockdown, like the others, and the heightened concern equal to the global financial crisis in terms of the way we measure the magnitude during the Russia energy price and war crisis, which has eased as in every country recently. Then we have Austria, and we will hear much more this from the competent person, the head of macro stability in the Austrian Center, Marcus. I just highlight that again, unlike the three other countries, but it's like in Poland before the global financial crisis, quite relaxed attitude on banks, on the global developments. Then there is a huge reaction, obviously, to the global financial crisis, like everywhere, and also to the Eurozone debt crisis. And there is a very effective, actually, very heightened communication of concerns. There is some relaxation as the measures are being put in place, as we interpret this and prove effective. But then increasing, awareness, and which turns into some negative sentiment by the lockdowns, COVID lockdowns, but not too much concern related to the Russia energy crisis and energy price crisis and war.
Around 5 minutes left.
But
sorry.
Yes, no, I'm getting there. The Austrian Central Bank have been paying increasing attention in its communications to the region, to the Central European regions, and the risks this entails, of course, for its own banking sector and for the region which hosts many Austrian bank subsidiaries after the global financial crisis. We covered this. I think we covered that. Now, so this is the core of our paper as it stands, or our research as it stands, but we really want to dig further and deeper in along two dimensions. One is what is the ultimate holy grail of the exercise, should be, once we find it, is financial stability policy communication and policy action. We want to see how the communication acts or how it doesn't, sort of what is the impact on economic agents. And as we've been told, there are two sets of the recipient financial sector participants and households, in this case, very importantly. We call it C-Say Act analysis. Now, for all the reasons you have heard before, why it is so complex to communicate on macroprudential financial stability, it is a very difficult exercise. We don't have an objective. There's no inflation target, as in the case of monetary policy, right? We have an evolving framework, an evolving toolkit. We have multiple tools at disposal. So how do we do this? So we are using the Macroprudential Policy Index as the measure of policy action. This is something that Rainer and his co-authors have developed in various papers for all the Central Eastern European and Southern Eastern European countries, going back to 1997 or so, so very early period, and measuring and coming up with an index. This is what the GVI colleagues here have received a lecture about yesterday. No time to go into this, particularly because our chair, who is the co-author of this, doesn't give me any time. So I'm just highlighting that this will be the measure of policy action for us. And this is, but of course, the index with the main components, the overall MPPI extended macroprudential policy index, which consists of the system-wide minimum capital requirements. You are very much familiar with basically borrowing-based measures and the liquidity-based measures. We haven't gotten very far, and we are sort of, this is very research in a group is so much fun. We have zillions of Zoom discussions sitting in Europe and in America, myself. But we are getting there. So let me show you our current thinking. We picked two set of indicators, trying to see what the communication on banking resilience. You recall maybe the blue bar, which was very prominent in the sentiment index. So we picked that indicator for the case of each of our countries, and the capital buffers measure that is taken by the country in question. And we depict it similarly as in the sentiment index. We show above 0 is more concern for the communication, which is the orange line. So it goes up, as the Hungary you've seen, then there's some relaxation on this measure, right? And relaxation. And then the actual measure that Hungary introduced for capital buffers. So what we see here, Adam will no question, no doubt elaborate and test us, is that the central bank introduced and increased the measure from 2012 or 13. Correct me, please, if I see it wrongly. Before that, there wasn't too much to speak of in terms of measure. But then there is introduction, there is some volatility and going back to the previous level. But the communication, and that's what is interesting for us, in orange, it shows that there is some, that once the measure is introduced, that there's some communication of concern. We are in the positive territory, orange line. But once the measure is introduced, actually the communication on that measure is becomes relaxed, which is interesting. It shows that maybe that the authorities took comfort from the introduction of the measure. Now we can go on in every single case. Let me pick Chechnya, for example, as a possible countermeasure. So in terms of the communication, it's pretty neutral on this measure. That's the orange. That's the last slide, sort of country graph for you. So there is hovering around the 0, so not really, raising any awareness, but similarly, the timing, obviously not by accident as the Hungarian measure, there is a big increase in the capital buffers, and it kept at a relatively high level. A different type of communication strategy on that particular measure.
We need to wrap up in 2 minutes, unfortunately.
Okay.
We're heavily behind schedule.
Okay. Household indebtedness, we do the same thing. We check what is the specific communication, orange line, and what is the measure that is being introduced. And we can kind of confirm, and we will listen to the country representatives here. I'm not going to spend too much time on the preliminary finding. It's very preliminary. It's very tentative. We are reading it. Obviously, we will have to do econometrics, not only eyeballing. But I hope that we vetted your appetite. Come back to us with comments and ideas, please. And finally, what to my mind is so exciting is to compare the communication that comes from the central bank regulator on financial stability, Macropru, and monetary policy. We heard from this from John in the first panel, very important. It seems to me that even if you have separate, fora to communicate, the coordinated message is important. So we are depicting here and discussing, no in details, don't worry, Rainer, but for every country we have the financial stability sentiment that you have now heard in much detail, in orange, as much as you can see. And in blue, it is the monetary policy sentiment index that we have calculated in our previous paper for all the countries. So what you see in blue is what the monetary policy is telling the audience, and in orange, what sentiment the central bank or the regulator communicates on financial stability. And there are quite interesting stories coming out of this, I think, but it's early, and anyway, I don't have too much time other than to highlight for you some very tentative observations that there might be an inbuilt higher risk sensitivity in Macropru, to be on the safe side. And if you really ask, central bank governors, what they lose sleep over, is not that inflation goes up by 2 percentage points. It's when there is a systemic risk in the system. So that's maybe sort of natural. We will test several ideas also by countries. Our panelists have received the slides, so maybe they can react to this. But what might come from the analysis. But let me highlight one thing that I think is interesting. In our sample, of course, we have Austria and Slovakia, where the monetary policy communication is coming naturally from the ECB, the central bank of the euro area. And that's the sentiment that we are using for their charts, obviously, which we also calculated in our previous paper. But the financial stability sentiment, what we are measuring here, is coming from national authorities. Right? So the National Bank of Slovakia, and in the case of Austria, the Austrian Central Bank. And we see that sentiments over financial stability in Austria and Slovakia are communicated on financial stability. Again, the orange thing. So what we are discussing, our core focus, is quite concerned in the post-COVID inflation period. But the communication on monetary policy really remains for a while very relaxed by the ECB. We know the underlying policy, debate and actions and all that. But it's interesting that national authorities took a proactive communication stance in financial stability.
1 minute maximum.
And
maximum.
This is
we're behind schedule.
Then there we are. So with all the caveats, how complex this is, I think is absolutely critical. Financial stability actually is if not pro forma, but de facto a key objective of central banks. What the sentiment is being communicated and how it's being communicated, despite all the challenges and the complications, is really critical. Making a mistake can be very costly, so the central banks are cautious and err on the safe side, perhaps. Obviously, the system has evolved, and this is the first time, to my mind, that the system can be really tested in the post-COVID inflation period, how it reacted, and we look forward to your comments on the sentiment index itself. And I'm asking my co-authors to be ready for any questions you may have in that regard. But also, we'd like to continue with the additional objectives on the C, say, communication, and act analysis, what the central banks do in the area of macroprudential. That's our next big bite. And then how coordination, or the lack of it, worked out between financial stability and monetary policy sentiment communication of central banks. Thank you very much.
Thank you very much. Right, without further ado, Adam, the floor is yours. Sorry for Roger.
Thank you very much. Yeah, I can see my presentation. Yeah. So thanks a lot for the invitation. I promise Rainer that I will be much shorter. But to be very honest, after this 2.5 hours, I have more questions than answers. So I will briefly talk about what we are doing at the Central Bank of Hungary. And my confusion is even bigger since the structure of the Central Bank of Hungary changed a lot in the last couple of months since we have a new governor. So now I became responsible not just for financial stability and macro, but for monetary policy. So I have a little bit more sight on the interference of the two, which makes it more complex. And it is very challenging to understand and to manage the differences between the two. So anyway, I will talk about what we are doing now in macroprudential policy and in the communication part of the macroprudential policy. And what is important to see is that the Central Bank of Hungary is one of the most active central bank on this field. So what you can see on this chart is that probably every single row of the balance sheet is covered by a macroprudential regulation. So the reason behind it is actually that we had a very, very bad experience after the global financial crisis. Since Hungary was hit the hardest in the region, we had a very active FX lending in Hungary before the crisis, and we have seen the problems of FX lending and the legacy of FX lending. So this is the reason why we've been so active in the macroprudential side, because we wanted to build up a financial sector which is kind of bulletproof. And this slide underlines the fact that macroprudential policy is really different from what we are doing at the monetary policy side, since in the monetary policy we have one or two, but not much more tools and one objective. The objective is sure that it is one, but within the macroprudential field, we have a lot of different tools, and the objective is a kind of blur. So this is how we start, and this conference and this invitation was very good for me, because we put together the structure what we are working in, but we have never done it before like this. So this is the process what we are using for macroprudential policy. So for sure, we have a lot of risk analysis internally, and based on this risk analysis, we are publishing the report on financial stability. This is what Piroshka and the team has analyzed. And then we have a lot of internal papers on decision-making, which goes to the Financial Stability Board at the end of the day and make the decisions. We have for sure a lot of consultation with the ESRB, ECB, and other institutions, and then we implement. And what is also important from an analysis point of view is that we have a macroprudential report at the end. So each year we have a kind of follow-up. So we try to measure what we could reach by the macroprudential policy, and we are publishing it in a macroprudential report, which is also a good material to read if you are interested in what we are doing and how effective what we are doing in Hungary. And on the communication side, since this process is very broad with many different stakeholders, the communication side is also a little bit more tricky than it is for the monetary policy, because we have for sure a lot of internal communication, in each phase. A lot of public communication and non-public communication as well. So just few thoughts about the internal communication. For sure, we have a lot of meetings with different teams to put together our knowledge and our views on the financial stability. What is more important is that we have micro and macroprudential supervision in within the Central Bank of Hungary. So we have some forums for the two to meet and put together the ideas, especially for a small country with just few of big banks. Macroprudential knowledge is very essential to be built in our policymaking. And after we have many different public communications, so the financial stability report and the macroprudential reports are the basics, but we have a lot of press releases, conferences. We even have educational materials which can be important for the public to understand what we are doing. And well, a lot of consultation, especially within the EU institutions. What is always a hard issue is that the communication to the different stakeholders is, I think, a little bit broader than in case of the monetary policy, in the sense that the different measures has different impact on the stakeholders. And from in case of, for example, borrower-based measures, at the end of the day, the stakeholder, the real stakeholder, is the customer, is the everyday people. So in that case, we have to explain what will happen, why it is important for them. For sure, as Michal said, probably everyday people are not very enthusiastic about capital buffers. Although I'm dreaming about a world where everyday people are talking about countercyclical capital buffers, but it is not the case now. And probably it is not bad that they cannot really understand what is happening in that field. But on the other hand, we have to be more cautious to explain it for the market and for the banking sector. And this is what we see in macroprudential policy, that it is a huge difference for what we are doing in monetary policy, because in monetary policy, we are strictly making the decisions each month and tell the markets. But in case of macroprudential policy, depending from of the tool itself, but in most cases, we have a lot of consultation with the banking sector, especially measures like borrower-based measures or liquidity or funding measures. We have to consult with them to understand their knowledge, their experience about the potential reaction of the customers, because in some cases, their ideas are very important to be built in the actual regulation to be as effective as possible. Because of the past of this type of regulations is much shorter, this knowledge is crucial. So this is what we are doing internally. So we have expert level, then consultation in between the departments, and at the end of the day, we have a financial stability board, which is the main decision maker body. We have, as I mentioned, a continuous dialogue with the banking sector in different forms. So, for example, we have some regular breakfast type of meeting with some bank CEOs. We have regular meetings in working groups with the bank associations. And for sure, we are very open to any type of communication, and they use these channels. So not just via their supervisors, but the Banking Association in Hungary is regularly talking to the central bank and telling us their experience. And also we have so-called market intelligence every year where we can talk about any banking specific risk and ideas, what they see. And we have a lot of communication with the broad public. So not just with the reports, but we have a lot of different articles. We have some more academic type of publications. We are communicating in the different forms of the press. Actually, we have Instagrams as well, and I don't know whether we have TikTok, so I'm not on TikTok, but probably we don't have. But we have Facebook as well, probably X, I'm not pretty sure. But we are trying to communicate with the broader public in different ways. And it is important that we put together, I think, a good structure on our homepage just for the macroprudential policy. So it is very easy to use in both in Hungarian and in English. It is very transparent. You can find all the background documentation, all the regulations, and you can go as deep as you want in the regulation and to see and understand what we are doing and why we are doing that. So this is also a part of our communication. And yeah, what is also important that we are very active in the education level to meet the public on different ways. And it not only means that we are probably many of us in the central banks are university teachers as well, but we are also going to sometimes to middle level of schools as well to help improving financial literacy in Hungary. For sure, the essence of this type of communication is not to explain in detail the CCYB, but more like to give some everyday advices for them, how the banking sector works and what they can see as a customer. So, in a nutshell, and I was very brief, right?
Very good, very good.
This is what we are doing in Hungary. And if you have further questions at the end of the presentations, I will be open to do that. Thanks.
Thank you, Adam. Right, Markus. No, don't think so.
It works now? Yeah,
Yeah,
it works
okay.
now. Now, I was anticipating that Rainer is looking very closely at the watch. I just have prepared 2 slides. That's why I'm going to stay seated. Before I go into my slides, perhaps 2 comments on the previous presentations. The one that Davide has made, I think I want to stress one point that was included in what you said. I think you named it visibility of the success of macroprudential policy. And that is, I think, a very crucial one. We don't have this one objective like the 2% that we can basically observe and say whether we are successful or not. If we are successful, nothing happens. And we can't even say that because nothing happens, or nothing happens because of us. And that's, I think, what really makes communication very difficult. And the other thing on Piroshka, what you've said in terms of the quite negative tone after the great financial crisis in the way we communicated, and the quite positive one during COVID. I think these two instances were really very different in the sense that after the financial crisis, at least in the Austrian banking system, we really had a lack of capital. And given the fact that the system has quite some difficulty of attracting capital from the outside, we needed to build it from the inside. So, and this is a long-term marathon, so to say, which needed quite some focus on the risks over time. And during COVID, it was quite different. We had built up all this capital, and banks were able to be part of the solution rather than the problem. And this was kind of also reflected in the communication. But if we go to the, I think I'll have to get the.
I think it's.
If we go to the first slide. Still doesn't seem. Yeah, here we go. As I've said, it's quite simple, and I admit also quite subjective. I tried to list 3 of the measures, also of very different types, that we either implemented or have to consider to implement regularly. And actually, this is also showing quite an evolution that we had in terms of the way we communicate about macroprudential policy. And the second thing it shows is that it's a different measure really requires a different communication. Let me start with the first measure that we introduced in 2016, which was systemic risk and OC buffers. At the time, actually, we basically had communication with the industry. That was, I think, what also Adam has been referring to. There was a lot of consultation with the industry, one or the other letter written in terms of the concerns of the industry about credit growth and the ability of the banking system to support the economy via the lending channel. All these concerns didn't materialize, but basically we talked to the industry. We did some press briefing just in case. We talked to people that might get asked by the press about this measure. But in the end, it wasn't really necessary. That was very different when we introduced borrower-based measures 3 years ago. Very different. We anticipated part of it, but I think it would be fair to say that we certainly didn't anticipate the amount of media attention that this measure got. And I think this has to do with the fact that first of all, it's not just the banks that were affected, but also ordinary people in terms of their ability to access credit. And then there's also a lot of, I would say, interested parties in terms of being part of that real estate economic sphere. So starting from the building industries, the developers of these buildings, but also real estate agents and so on. And we sometimes felt like being the only voice in the arena to defend this measure against 15 other voices, including political ones, because the way where people live and how they live it, whether they rent, whether they own, in the end is a very political question, and that is also an experience we had to make. And I think this experience documents also that there are different channels you need to use when talking about this measure. Certainly, borrower-based measures, we made use of blogs a lot more, of podcasts a lot more, and so on. We wouldn't do this if we implemented a measure where we prescribed minimum risk weights to internal model banks for macroprudential reasons. We would have a lot of fun with that, communicating externally, but I think we would fail totally. What we are now faced with is of course, a situation where the whole approach to the countercyclical buffer changes a little bit in terms of the fact that we have a lot more countries introducing positive neutral rates, using that measure also in a neutral environment with a positive rate. We are trying to adapt to that in the sense that we now introduced just very recently a more flexible set of indicators in order to have more flexibility to set this approach. The way we tried to accompany that by way of communication was to be much more proactive in terms that we consulted those indicators. We plan to publish these indicators regularly in a dashboard to be very transparent so that everyone can observe those indicators, at least for the interested public. So we try to take some of the lessons that we had for the borrower-based measures into that discussions that we anticipate for the countercyclical buffer, although certainly the media attention is not by far not going to be as intense as it has been with borrower-based measures. Now, going to some of the lessons that we have learned in that process over the last 10 years. First of all, I think there has been said quite something about the clarity and also the proactiveness of communication, which especially the proactiveness is difficult because financial stability, especially in peace times, is a very boring topic. So you can have a hard time finding someone to talk to about this topic. That's why we actually tried to have a regular dialogue instituted with our economic research institutes, with the social partners in Austria, so the business community, but also the workers and unions, and to do that on an annual basis, irrespective of whether there's an issue we need to talk about urgently or not. And that is, I think, something that that proves valuable, because you get somehow a basic understanding for the things that we are talking about, which then helps whenever you get into an urgent need to communicate. The second is transparency. I think it's really important to have key data out long before you talk about implementing a measure, in the sense that whenever a journalist or someone who's interested tries to understand a problem, there is the data out to actually track that. And the way we do it is that we try to work a lot with dashboards, interactive ways of presenting, for example, also the way how borrower-based measures evolve, and try to keep the discussion fact-based, which is hard enough, as we had to learn during the episode of the media attention for borrower-based measures. A third thing that might seem a little bit weird, the legal legitimization of communication. What we mean by that is the fact that we have to make clear why we do what we do anyway. So we have to talk about our mandate. And we have to talk about this in at least a regular way. That's why we try to plan our communication activities also via blogs and via podcasts, and embed this in the overall communication policy of the bank on an annual basis. Non-communication is a difficult thing and has a very high cost to correct, because if you don't communicate on a measure, the risk that we had to learn with borrower-based measures is that others will communicate in a way that you then have a very hard time to correct. And the thing that we had to learn is that especially getting back from an emotional debate to a fact-based debate is something that can take quite some time, and is very very hard to do if you do not communicate over longer periods of time. The sequencing of communication, what we mean by that is really this thing that different measures have a different audience and need different tools to communicate. And I think it has been mentioned also in the first session, the language with which you're communicating has to be different depending on your audience. And I think that's a harder task than you might think it is. Because I also notice it with myself and with my colleagues that in the end, even if we think that we speak in a simple way, mostly we don't. So that's a really hard one. And my last point would be on the right doses of information. What do we mean by that? Actually, the thing that we observe is that, or at least that's my impression, there is this story of the boy crying and shouting wolf, and nobody listens to. So there is really the risk of information fatigue if you talk too much about risks that don't materialize. Then there is, of course, the risk, Ernest, you mentioned it, of a self-fulfilling prophecy. If you talk up risks in a way that they actually have a higher probability to materialize, both aspects actually lead to the risk of a too late communication. And that's, I think, something we need to be aware of, that if anything, I think we tend to be too late on our communication. And my last point, it's not on the slide, but it has been mentioned beforehand, moral suasion and whether communication and early communication can really change the behavior of market participants in a way that we don't need to take measures. I learned to be a bit more humble about that over time. I think that especially in times when competitive pressures are at work, early communication is helpful in terms of preparing the banking system on what will come, on fostering the understanding of the public and the banking system of why you do that measure. But whenever competitive pressures are at work, it's very hard to circumvent measures by way of early communication. I think that's, at least for borrower-based measures, for example, something that is almost impossible. Thank you.
Thank you very much. No.
Actually, Rainer, I have 10 slides. How much time do I have?
10 minutes.
10 minutes. I hope for something more, slightly more time. Okay, but I already have advantage because I'm in Bratislava, so it took me just 1 minute to get from office to this meeting room, so that's already a big advantage. Okay, like others, let me also thanks to organizers for invitation. What I like about this seminar is topic, because there are many seminars on macroprudential area. Next week, I think there is a conference in ECB and ESRB about macroprudential framework. There are many seminars on capital buffers, activation of different tools, but not so many seminars on communication. And communication is a very important part of our work because we publish different reports, we communicate to media, we also publish different decisions and activate different tools like Marcus mentioned. So it's a very important part, but not so many discussions about this topic. Okay, so let me very quickly first mention why it matters, why communication is important. Well, communication is not really a new thing for us because for many years we have been publishing financial stability reports, so we do have some experience with communication. We know how to draft FSR, we know how to organize a press conference, how to sell ideas from this report. But what has changed in the past decade, what makes communication much more important for us is that since the last decade, at least in the European countries, we have a mandate for macroprudential policy. So our burden of responsibility, I think, is much heavier than it was in the past. Because in the past, we still had some responsibility for financial stability, but it was just about, okay, writing financial stability report, maybe some description of the trends, but that's it, nothing else. But now we have tools. We have tools in our hands. And that means if there is a major crisis, we will be taken responsible or partly responsible. And we know from other politics that one thing is a good idea, or let's say good package, as we can have in macroprudential policy. But second thing is how to sell this idea, how to implement this package in an environment that Marcus described as a very hostile, especially in borrower-based measure. So communication is extremely important for policymakers, because our task is not just to prepare the package and just to wait whether it's going to be implemented or activated, but our task is completed when it's fully activated. So we are policymakers and communication is extremely, extremely important. Okay, very briefly about our perception of communication. I will try to explain. So we see two dimensions in macroprudential communication. First, we can call it operational, and that's what we heard so far. So operational communication or dimension means that we publish report, we need to define what's the tone or what's the sentiment of the report, content of the report, how to sell it to the market, what channels we'll use. Also, we produce some other reports. We also make some decisions. We should also discuss how to sell it to the market. So that's operational stuff. I will mention more details about that. But second, a very important dimension is what already mentioned Marcus. It's a overall mood in the society. Because big disadvantage of macro policy is that we usually activate tools when everything is perfect. Last time when we activated borrow-based measures, economy was booming, lending was very high, real estate market was booming, so everybody was happy. But it was our task to step in and to say, okay, be careful. We should stop this trend. So it's like going to a party that is pretty wild, and you have to turn on the light and say, okay, watch out. I mean, you are too noisy, and there is too much alcohol. Try it. It's extremely difficult. So we have a very difficult task to really step into this kind of party. So what is our strategic objective in communication? Shape the mood in the society that despite the fact that macro policy will bring some pain, will bring some obstacle to households, borrowers, it's still something that is needed. And that's a strategic objective, because otherwise, when you have a need to activate borrow-based measures and society is not ready, you don't have a sufficient credibility to activate something, there will be resistance, and such a high resistance that sometimes you will not succeed with your measures. So this point is extremely important. Okay, I have several slides about this. Operational perspectives. There are many things that we could talk about, but I have just 10 minutes from Rainer, so let me focus on the major topic. Who should we talk to? That's very important. We heard from previous presentation from Michael that monetary policy is pretty much focused on the experts. Others, like public, it's very difficult to reach, I can admit, and it's not really a part of this monetary policy communication. I think in macroprudential world, it's slightly different perspective, because macro policy has a relatively wide reach. So when we activate tools, that has an impact on the households, also on a corporate sometimes. It has an impact on the banking sector and the rest of the financial sector. When we publish reports, there is a lot of interest from the media, also from the academia. We used to meet with rating agencies, IMF, ECB, ESRB. So a lot of attention, a lot of interest in our output. But the question is, what again Marcus mentioned, how to communicate, because normally we have several messages that we want to communicate, but expectations of these groups are usually very, very different. So in other words, they all speak very different language. So how to communicate one message in different languages? So what we use in our central bank, we call it tiering communication. So that means that we try to adjust our communication to specific needs of these selected groups. Okay, so it looks like this. So tier 1, that means it's relatively easy communication targeted to public, possibly as also journalists. So what we usually use social media, very simple statements, very simple stories. So of course, public is not interested in CCYB, but we select specific topics that are relevant for them. Real estate market, LTV, and other topics that are relevant, and very simple stories. So we use also Financial Stability Hub or web page, and very simple story that we are selling to this group. That's very important. Second tier or second layer is more expert oriented. And here we have a financial stability report. And we also publish on quarterly basis macroprudential report. Even in financial stability report, we try to use a relatively simple language. That's also very important. Single language. We do not cover everything, only major topics, the most important for financial stability. And also overall language is very, mostly story oriented, because that's very important for the readability. How successful we are, I'm not sure. From time to time, we do some kind of survey between bankers and also journalists. So, and in most cases, the last time we did this survey, the feedback was very positive. So they mentioned it's a readable, topics that you pick up are all relevant. So hopefully this system should work. And the last tier or layer is more about technical analysis, because academia, some journalists and also some bankers, they are interested in this technical details. So if I give one example, for example, stress testing, result of the stress testing. Academia and some bankers, they want to see all details about methodology. So we publish some analytical paper on the stress testing, summary of the major results by different sectors, and also decomposition of the losses. That's a part of the financial stability report. And few sentences. It's a good or bad for the public. That's enough. And that's how it works. That's this sequencing of information for different groups of attendees. Okay. One additional information about this operational perspective. Again, that's our lesson that we learn. Maybe it works in Slovakia. I don't know how in other countries. We publish many things, different reports, also decisions. And when we publish it, we are mostly in a let's say static position. So we just wait what will come out of this media world about our topics. And what we do, we try to be slightly more proactive. So we usually try to have some preventive meetings with the media, mostly the most influential key journalists and media, and we try to, even before publication of the report, to communicate what are the major messages and what are the major topics we want to be covered in the media. And when all these key journalists are covered and they are on our board, so they take this message to the public, usually other follows. So we have a relatively good experience. We're really picking up the most influential journalists to have some influence on them, and usually it works relatively well. And it's usually very, very important to do it, especially before you want to introduce some macroprudential measures. But I will mention it later on. And the last sentence about these communication channels. When I read newspapers, I usually use internet, some web pages. My parents use classical paper newspapers. My kids probably will use something different. So they will follow some YouTubers or some other social media platforms. So we have to adjust our communication. And actually, that's what we have done. So we also are present on all the social media. So far, our experience is that it's not so effective. So the most effective is really to take out on the major media, mainly TV channels, and then the news are spread to the whole public. But so far, this channel is less effective. But definitely want to be present. Maybe it's about quality of the product we are offering, because in this segment, competition is very tough. Try to compete with some well-established influencers. So, but maybe in the future, we will succeed even in this era. Okay, let me now move to strategic perspective. And again, I can also start with practical examples. So just very briefly to repeat, strategic perspective comes from this definition of macroprudential policy. So we bring some obstacle, we bring some pain to the market. So we should prepare them for that. We started with activation of borrow-based measure in 2015. Then there were several rounds of tightening. Before every tightening or introduction, we had very intensive communication with the market and also with the media, with key and most relevant journalists. Of course, not every detail was provided because of the front loading. But for example, in 2015, when we had these initial discussions, we tried to stress the need to do something, or otherwise there will be a crisis. That's very important, to find the link that risks are accumulating, and if you don't do anything, there will be a crisis. So at that time, for example, we invited also colleagues from countries that had a major crisis. For example, we had a colleague from Bank of Spain, head of financial stability. He was here and he was presenting bankers how difficult it is for bankers if there is a crisis. He was talking about the major layoffs in the banking sector, and you could see faces of our bankers, how they reacted to this presentation. So we try to be very preventive, and not just to give details about borrow-based measures, but be preventive, especially about the awareness of the risk and crisis if we don't do anything. Okay. One additional slide about strategy view. So what is our objective? Our objective in this strategic perspective is to change the perception of macroprudential policy. So it's not something that will cause you just a problem, will bring some pain or some obstacle, but in a long-term perspective, it will bring you stability. So in other words, we're talking about LTV. LTV will bring you something bad on you in a short-term perspective, but in a long-term perspective, there will be some stability. And again, coming back to practical example, when we introduced borrow-based measures, of course, there was, like Marcus mentioned, there was a criticism. There was a lot of media attention. Most of the time, they mentioned that there will be affordability much lower than that it was in the past. Young people will not be able to get into loans. But most of the cases, as I remember, at the end of the articles, they mentioned, but it's needed. It's something that we need to do because otherwise there will be some crisis. So there was some resistance, and our task is not to destroy this resistance. It's impossible, but to reduce it. Reduce it to the possible that is manageable for us to bring these solutions and to implement it. So the strategic perspective is extremely important. Another point is what Marcus also mentioned. If we do not fill in this vacuum in this media, somebody else will come. Politicians will come, bankers will come, people from the media will come, and they will exaggerate. Be sure. They will exaggerate all possible consequences. So we have to be present. We have to be present, and we call it constant communication. Okay, and one last slide about this constant communication. One example. Well, this constant communication is not something that is fully developed. It's still ongoing work. And just in recent days, we discussed with colleagues that one of the options that we can do is some kind of media campaign. For example, Benjamin just showed me that they have a video that financial stability is not boring on the webpage of Bundesbank. That's the way how we should do this. To have a media campaign and to explain the relevance of borrow-based measure, relevance of capital buffers, but mainly borrow-based measure. That's very important. But one example, we have one tool. It's called age-dependent DTI. I have to say it's not very popular tool. Media do not like it. IMF doesn't like it. So many media and institutions are quite skeptical about it. But we have very good reasons why we have it. There are some specific trends in our banking sector, so we need it. It's a very important part of our toolkit. But what we do, we try to have this constant communication. So almost in every FSR, we try to incorporate some part into the text where we explain why DTI, age-dependent DTI is important. So we try to recalibrate it, not recalibrate, so update impact analysis. In the last FSR, there was a box where we have an impact of aging of population on the lending, also on the portfolio in the banking sector. And again, we stress the DTI is kind of answer, how to limit this risk. So that's a kind of constant communication that we keep it in the public discussion and we keep our view on this. Otherwise, I can imagine that there would be some pressure to deplete this measure. Okay, last slide, strategy for the future. Well, what is crucial for us, communication is not just some kind of part of our work. No, communication is a pillar. Or it's we call it a tool, soft tool that we use. We of course influence market. It's very important because even their behavior has an impact on financial stability. So talking back about public sector, it's very important to engage them because their behavior, how they behave on the residential market, how they behave on the lending, has a far-reaching consequence for financial stability. So communication is really very important part. And last, I have two very nice sentences. Let me read it. Don't wait for the rain to start before fixing the roof. And even when the toolbox is at rest, the microphone shouldn't be. I have to say, these are not my words. I wouldn't be capable to come up with those sentences, but just to show that even artificial intelligence is part of our communication. So, thank you.
Thank you very much, also for a quite a concise presentation, actually. Thank you very much indeed. So we're out of time, but of course we give Adam the chance to speak also for 10 minutes. We'll probably not have a chance then for questions and answers. That's something that can be done then on an individual basis over lunch. Thank you.
Okay, thank you very much. Thanks, Rainer, and organizers to inviting me to this a nice workshop. I'm not at the central bank anymore, but I used to be in those times where all the financial stability analysis policies and communications was set up. So I will have a few remarks on the analysis you did, on your text analysis of financial stability reports, and then a couple of more general observations based on the fact I'm in academia, but I'm still sort of keeping in touch with the central banking world. As people say, once central banker, always central banker. So I'm doing technical assistance on financial stability around the world. I did more than 30 projects from Peru up to Mongolia, up to Africa. So I've seen a lot of challenges on how to communicate the results of analysis and applied policies. So a little bit on the Czech central bank. I guess this is very similar to other central banks in the room. So the main objective was always to reveal the analysis in the FSRs, which we only did annually until 2017, and then moved to a semi-annual frequency, and then all the other more traditional as well as more fancy channels like blog, vlog, podcast, and social media. So I guess the Czech central bank is on par with Slovak central bank in that case and others. What I wanted to kind of brought you to an attention when you look at the country's communication strategy is a bit of a context, right? Like, why is the financial stability report having this and not that? So eventually the results of the analysis Piroška presented show that there's a lot on banks. Of course, one reason is that the banks dominate the financial sector, clearly, but also it's the data availability, right? A lot of the financial stability department grew up from supervisory departments, and the data was there on banks. So we started naturally with all this rich data on banks, and then only additional data on non-banks markets and individuals or firms have been added over time. Also, what influences what you cover in the report or not is what's going on. So indeed, the rising household debt and house prices is an issue in Eastern Europe, but it might not be in other countries. And what also makes a big difference and how you write your messages is what other functions you have. Many central banks are monetary policymakers. Not all, of course, directly, if they are part of the monetary union. And also many are supervisors. And sometimes the topics start to sort of kind of, overlap. And then, as you also mentioned in the presentation, not always you can talk about things that are rather confidential. There is also a thing that is more personal. It really depends on the top management, the board members, so how they want to structure the messages based on their own preferences, right? So in some countries, the financial stability reports are super small, concise, short to convey a clear message. In others, the board members like to repeat charts to see how things are developing. So, the departments are adding and new pages, and then you end up with a report that is 150 pages, which cannot be read, as a whole. So that really depends on how the management looks at it. And also the structure might change from time to time. I remember once we had a course when I was at the Joint Vienna Institute on financial sector surveillance, and we used Armenia as a case study of a report to look at and criticize. And then the guy went home who was from Armenia, and he told me later, I was so ashamed, Adam, that our report was so criticized. So we totally changed the report. We made it more graphical, shorter, concise, and that made a real difference, right? So this also changes over time. What is also influencing the report is what are the global topics, what the IMF, BIS, Basel Committee comes with, and that sort of management wants to cover that, right? So that's true too. A couple of comments on the Czech case that was presented by Piroška. So the text analysis, the kind of interesting fact that from the very beginning, the Czechs tend to be more concerned by everything. Actually, when I started to work at the Financial Stability Department, that was the job description, to always look for risks, look for potential bad scenarios that can happen. So we were, wearing black ties and black shirts to meetings. So we are the pessimists in the room. So that was actually typical of those years, and that stayed, right? So even if it didn't rematerialize, that was kind of different from maybe supervision department or monetary policy. Also, the departments were new in 2000s, so you had to sort of somehow prove the relevance of your existence. And that happened especially over the global financial crisis, right? So there the communication and the concerns, some of them materialized. So we kind of finally proved that it is good to have such a team in a central bank. Yes, you had to sort of balance the risk orientation of your analysis with something positive. So we typically in the Czech Republic had banks that were very liquid, capitalized, and profitable. So that was always a kind of mentioned at the end of the report. So despite all these pessimistic pictures, we are safe. I think a nice thing, and that might be a takeaway from my short presentation, is that there's a very strong peer effect among the central banks around the world, but especially in Europe, because when you sort of do what you do, you look at what others do, right? So especially in the V4 countries, so in the Central Europe, we typically look at Slovaks, Hungarians, Polish, and they looked at us, right? But then you also look around sort of the more advanced economies and, ECB, etc. So you kind of copy the best practices that others do and slowly sort of develop together. So that is maybe in Europe especially sort of strong because it's supported by the structure of the European system of central banks, by all the committees and groups, and also the various conferences, seminars, regular seminars, such as the one that the Slovaks always organized around Christmas to exchange, the new developments in analysis and communication. Right, macroprudential communication versus action, right? So the kind of disparity between how we communicated or the central bank communicated about the banking sector and the CCIB activation. I guess it was, part of the strategy to understand the countercyclical capital buffer more as a complement to the borrower-based measures than sort of a tool of its own to tackle the mortgages that have been already provided at a looser sort of LTVs, DSTIs, right? So even if you put it in the picture together with the banking sector stability communication, I think it should actually be more sort of related to the real estate and household debt, because that goes together as in many other countries like Norway, Sweden, and so on. And the last chart, macroprudential versus monetary policy, again, the Czech picture. I think this is a very nice chart that illustrates how the two cycles are different. Right, the monetary cycle is basically the monetary policy is reacting to the business cycle, which has much shorter frequency. So sometimes you sort of communicate up and down the inflation risks, while the chart on or the line on the financial cycle on the sort of risks to development of the financial sector has a much slower ups and downs. So I think that this is correct what you found. And also in the Czech case, it's especially the monetary also influenced by our monetary policy experiment, which was the exchange rate commitment, kind of an equivalent of quantitative easing in other countries, that drove a lot of communication in the monetary policy area. So that creates this sort of big ups and downs. I guess that's it. Thank you for your attention and happy to answer questions.
Thank you very much. So we are actually a bit behind schedule, and I take all the blame for that on me, of course. But I have to say, I found this a fascinating discussion, and also this little tour across 4 countries with the differences and the similarities. And I think, for us, for purposes of this project, I think this gives us a lot of food for thought. I hope it was also interesting for you and for the audience to compare this a little bit. Because really, I think there's both, right? There's a lot of similar approaches, but also a lot of country-specific things. And I think peer learning is probably something that we can all benefit from here. So that I would not do Q&A now, simply given the time. So we break for lunch, and then we reconvene here at 2:30, I think. So there is about 45 minutes now for lunch. Lunch is outside. And so thank you very much again to the presenters, and see you again for the 3rd session.
So now it's an unthankful task for me to wake you up after the lunch break. So we need to talk, and we need to talk about international macroprudential policy communication. And let me briefly introduce our distinguished panelists, all of whom bring to the panel a wealth of experiences long-standing experiences, not just in macroprudential policy, but also in communication more broadly. To the left is John Fell. He's a veteran, I would say, of European macroprudential policy and financial stability. He's Deputy Director General at the ECB. He has been deeply involved in shaping macroprudential policy in Europe and its communication. You can listen and watch him online in various formats. Just Google him. Next to John is Erland Neer. He's currently advisor at the IMF. He authored and co-authored an impressive amount of work on financial stability and macroprudential policy. And to the left is one of his co-authors, is Gaston Gelos. He was formerly at the IMF, responsible for macroprudential policy. He's now deputy head of the Monetary and Economic Department and the head of the Financial Stability section of department at the BIS. And he also co-authored and authored many influential papers on financial stability and macroprudential policy. So trust, and let me briefly introduce our topic. First slide. Okay. So trust and credibility are the currency, not just of macroprudential policy, but of central banks. Effectiveness of our policy and achieving and ensuring financial stability is reduced if we do not communicate properly. I think we had two fantastic panels that clearly showed that. And clearly, central bank communication has changed over the past years. And it used to be a communication, at least a couple of decades ago, and even longer, that was communication that was speaking more in riddles. Then it's a clear communication. There are two very nice examples of that. It's Alan Greenspan. If I seem unduly clear to you, you must have misunderstood what I said. And there's one even better example of the kind of communication. It's Montagu Norman: never explain, never excuse. I think we are definitely in a different camp now, and the discussion today already clearly showed that. In terms of communication, this is not just it's not just to reach our policy objective. It's all about transparency. It's about accountability. This was also mentioned previously. And if you look at, for example, at the Eurobarometer that tries to measure the trust in the ECB, then you can see that trust can be lost over time. And the global financial crisis is definitely a watershed moment in terms of trust in institutions like the ECB and central banks more broadly. And trust can be rebuilt, and communication is probably an important part of that endeavor. So, coming from the Bundesbank, for us, communication is an indispensable part of the policy cycle. Usually, we try to identify risks. We try to do surveillance, monitor risks. We propose measures. We do ex-ante policy evaluation. We implement measures, not us as central banks as central bank in our case, but as macroprudential authorities. And then we do the ex post evaluation, and then we start the cycle again. And along this cycle, communication, at least in our interpretation, is key, because we need to explain at each and every phase of the policy cycle what we are actually doing, what we are aiming for, and most importantly, when we introduce measures, we need to tell the public what are did we achieve the intended objectives, were there unintended consequences, positive or negative. Oops. So in Germany, this policy cycle is populated not just by the Bundesbank, and so we are a committee. We have a committee-like structure. This is different to some of the European countries, but not that different. Gaston will say a little bit more about the committee structure and its implications and challenges. In our case, the Ministry of Finance chairs the committee, and as you know, ministries are sometimes not that keen on active communication on financial stability issues. So there's not too much communication you will find on the website of this Financial Stability Committee in Germany. However, for us, communication is key, because our mandate enshrined in the law is to identify risks. Identify risks is also a very unthankful task, because whenever something happens, you obviously didn't identify the risk, at least to the extent necessary, and maybe you haven't been heard by policymakers to address these risks. Second thing is that we are not communicating in isolation, and that's why we need to talk about international and European financial stability communication. We have the ECB, we have the ESRB in Europe. They have their independent communication that is sometimes in conflict, sometimes it's in line, it's fully aligned with the national communication. The different layers of communication can create confusion in the wider public. We experience that quite often when we have our press conference for the financial stability report just a day after the ECB, and we receive questions only about the financial stability report of the ECB. I mean, this is gives credit to you, but nevertheless, the risks in Europe are probably quite different from the risks and from the risk landscape in Germany. And this extends to the BIS and the IMF as well. So you have your independent assessments of the risk situation. You communicate in the annual report or in the global global financial stability report of the IMF. You communicate about financial stability, and so the question also for the panel, and I'm quite curious to hear your perspective on that, is what does it mean that we have the different layers of communication, and how do they interact with each other, and is that a challenge in itself? And then there's the question: who's our audience? We heard a lot about that today. For us, it's the wider public, but the wider public is sometimes the experts in the banks. This goes also to the discussion we had in the first panel, whether or not our financial stability report is an instrument. It's an instrument, a macroprudential instrument, by coordinating risk assessments, because many of the risk assessments done in financial institutions, they lack the general equilibrium perspective, because everyone is just looking at the risk from its independent perspective, and not what does it mean if everyone else is exposed to the same risk. So for us, it's the wider public, but it's also the experts. It's also the IMF, it's also the BIS, and it's the ECB, and it's the ESRB. So the audience is quite diverse. Unfortunately, if we just look at the success of our communication in terms of downloads, it's not that much, unfortunately. So I'm very happy that we use AI now, which will probably help to boost downloads on our website. And maybe a last point, because Marek mentioned it, we have tried to explain to the wider public what financial stability is, and it was mentioned several times today that financial stability is boring when it is maintained, right? I mean, it's completely boring, and we made a video for the wider public in a cartoon style to explain why it is not boring. Film up.
Today's topic, financial stability.
Ugh, boring.
True. Thank goodness. Only a financial system that is stable can function properly. Businesses and households obtain loans, savers benefit from good investment opportunities, and payments are undisrupted.
Yeah, as I said, boring.
But that's not all. Shocks in the form of unexpected developments can really shake the world.
And then?
Well, a stable financial system also works in times like that. Businesses continue to get loans, and your salary flows safely into your account.
Aha, so it's not a big deal.
There you go. Financial stability. That would be nice, but we need to take a closer look.
Aha, things are getting exciting after all.
Indeed.
Okay,
Banks
this
are
is just a teaser. We
They
want to
grant
reach
each other
100,000
loans.
views.
This
We are
means liquidity flows to where it's needed.
at 97,000 right now. So please watch it at home. Unfortunately, I showed it to my wife, and I thought it's a fantastic and simple way of explaining it. She said it's boring, but anyway, it's just 3.5 minutes, and with this, I hand it over to John to kickstart the discussion.
Thanks a lot. You started with some quotes. Can you hear me?
I hear you.
You started with some quotes. I had one myself, but now I'm not sure after this video will show whether it's going to work. But I was going to start with a quote from William Randolph Hearst, who underlined, if it bleeds, it leads.
Oh, you have to turn it on.
I thought it was from, okay, so I start again. Yeah, so as I said, actually you had a couple of quotes that I could have used myself at the beginning, but anyway, I have a different quote to begin with, which is a quote from William Randolph Hearst, who said in the 1890s, if it bleeds, it leads. It was to do with, he was, I think, the first media mogul in the US, and it was about generating business for his newspaper during the Spanish Civil War, during the Spanish-American War. And I think it was, what's useful about the quote is I think it helps us to think both about the risks and the opportunities of communication on financial stability, because we potentially are playing with fire. We can write things that are super interesting. What William Randolph Hearst was talking about was people like to read about bad stuff. That sells newspapers. And so we do have the potential to do that. And so we need to discipline ourselves. And I think this is part of what we're talking about to do with effective communication. We also see it when we are in crisis, that the readership statistics in comparison for our FSR in comparison with our economic bulletin, they surge way higher. So people are reading the FSR in bad times. There was a lot of very interesting material topics discussed this morning, and I guess I don't want to repeat what was said this morning. I mean, I think maybe just one piece of history on the ECB's financial stability review. I mean, at the very beginning, even before we published, we went through a number of rounds of dry runs, mainly because at that time, this was 2004 when we eventually published, was because governors were concerned about this whole thing of making crisis self-fulfilling. And it was an experiment. We didn't really know what the impact would be. We had some lessons from the Bank of England and the Riksbank had been publishing before, but we were not sure what the market reaction would be. People had in their minds the famous Greenspan irrational exuberance speech from '97, I think, where he caused a stock market correction by suggesting that the market might be overvalued. And then, I don't know, I mean, I think we're all from international organizations. I mean, one thing that I was fascinated by the work that was presented this morning on text analysis, and but I was thinking also about some of the challenges that we face in international organizations, because we are trying to find a language, a compromise language, across many, you know, parent institutions, let's say, and stakeholders who have also different languages, and different words mean different things in different languages and so on. And so it's kind of like, you know, some words may be extreme in one language and not in another. And then in the end, do we even end up with a text where we have really reached the sentiment level that we had intended to? I mean, I've looked back at some of the analysis that have been done in past FSRs that we've done, and it hasn't always matched up with what I thought at the time. So I was just saying at the lunch break that I think this type of analysis, I think, is going to be very helpful in the future for putting kind of discipline on, you know, what do we do when governors discuss our text and say, oh, we agree with the analysis, but, you know, the tone is a bit too negative. And then so we can take out your, you know, sentiment tool and compare it to last time, and you know, that we would have some kind of way of keeping a track. We kind of do anyway, but not in the disciplined way that you that you had in your work. I have only 3 slides as promised, so I wanted to just, I mean, basically, this is we had a conference on this topic last November to commemorate the 20th anniversary of the ECB FSR. It was a restricted conference. It was recorded though, and it's available on our website. And this chart, I think it was said by someone this morning. This chart is showing how the content of the FSR has changed over time since 2004, between 2004 and 2024. Halfway through, we got, well, all of us got, it was mentioned by Mark earlier, that we got macroprudential responsibilities. And then we started reporting on that only during COVID. You could see it there up in the top right-hand corner. But what we have communicated about and the reasons why we have communicated have changed over time. So originally we used to write it in the forwards, in the preface to our FSR, that the intention with publishing this FSR was to promote awareness on risks in the financial industry, enhance public understanding. We had an objective in mind, really with the hope that we could influence behavior. I mean, I think within financial institutions. So we were really thinking about it as a macroprudential policy tool before we had a macroprudential policy toolkit. And then we got the macroprudential responsibilities in 2014, and then we started publishing about Macropru, why we do it. Not okay, maybe helping a reader think that there might be a policy reaction function, but we all know there really probably isn't. But to give a sense for why we would be tightening at different stages of the cycle and so on. And of course, there's also the accountability side. Now, the article also, what we tried to do in this article was to explain the role of communication, and we did, and then against this objective, were we successful? So we did sentiment analysis as well, and there you can see a comparison between ourselves, the Bank of England, the Fed, and the IMF, and I think there's a couple of things that come off the chart on the left-hand side. One is the whole issue of level, and you had it this morning in your 5 charts that, you know, the level can be different. But you'll also notice that the changes are more correlated. So there is co-movement, so to speak, across the publications of the institutions across the cycle. So, I mean, are we more pessimistic or optimistic on balance? Yeah, I mean, I don't, that might be even cultural. As you can see, we're kind of in the middle there. And then the other is, I mean, do we actually provide useful information? Do we lead in any way? Can we predict crisis? I don't think anybody believes that we can actually predict crisis, but we do at least that we are not giving the same sentiment at every stage, you know, that last one is the same as the one before and you're always pessimistic. No, there is cyclicality. This is how the sentiment changed in the lead up to a financial instability episode. And you can see, okay, it's coincident at the point of the crisis, but we are getting more negative as we go up, and then we get less negative on the other side. So I think that there is something coming out of the sentiment analysis in terms of information. And then the third was we did a readership survey. And I just want to, because I have the figures on the paper here on, we had 86 respondents to a survey that we did. It was partly half and half. It was directed. I think some people, I don't know if it was directed to you, but it was directed, I think, to FSC members and some market participants that we knew. And it was also made available for anybody who wanted to submit an answer. We got 86 in total, 14 questions that you can see there, split across, do we have any influence? Well, do we identify relevant issues? Do we have any influence on our readers in terms of behavior, and what kind of behavior? And then which parts of the episode do our readers find most useful? Green here is generally good. The darker, the better. So you can see there that market participant, our readers, think that we're getting the correct risks. Although they also think that we have a tendency to overstate those risks, that we're more on balance over time on the more pessimistic than the optimistic side. Most surprising to me, and most encouraging also, were some of the answers on the middle segment, because we discovered, I was afraid what the answers would be coming into this survey, but it was helpful to know that all this work that we put into it was worth it. And it looks like it does have an influence on policy. It has an influence on researchers. And the most interesting was it has an influence on risk managers. And this was actually confirmed in a panel that I chaired in the conference, where we had a risk manager. Ernest was on the panel, and we had a risk manager there. And she confirmed that she would go to her board with our FSR and say, see, the risks that I'm talking about, they're also talking about them too. And so it fed into the risk management process. I thought that was a fantastic victory. And then, the readers, I mean, they read across all kinds of different things, and different readers tend to read the overview. So you're right to focus your analysis, I think, on the overview, the executive summary, and then they selectively read across the rest, because we have analytical pieces, boxes, and so on. And I think probably people focus on the things that really interest them. Stop there.
Thank you, and I can confirm also from our market participants in Germany, the FSR is not just yours but also ours. Is mandatory reading for risk officers. So they use that also internally when they discuss the overall strategy and risk taking. That is, but with this comes a huge responsibility. Okay, Erland.
Thanks so much. I wait for the slides to turn. Thanks so much for inviting me on this panel. I will want to organize my remarks around three questions, three slides, three questions. One is, what do we know about macroprudential policy communication? The second is, what are we learning from experience? And the third is, what else could research investigate? So I'm gonna, after this disclaimer, get to my first slide. What do we know? I wanted to remind everyone that, of course, we had a debate about macroprudential policy communication already after the global financial crisis, and done quite a bit of reflection at the time. I think the starting point was that macroprudential policy has a difficult objective. It's trying to control tail risks that lie in the future. So the benefits of macroprudential policy action are always going to be in the future. The costs are more immediate, giving rise to a bias towards inaction. That inaction bias tends to be compounded by political economy headwinds, lobbying on the part of the financial industry. So essentially, this political economy context looms large for macroprudential policy, perhaps larger than for monetary policy. And that gives rise to three objectives for macroprudential policy communication, which we've set out in the IMF's framework paper in 2014 on macroprudential policy. So we said there that one thing you can try and do with macroprudential communication is to generate and maintain your own willingness to act. So in other words, to create commitment for future action, in the event that action would be needed. The second key objective is to use communication to garner public understanding of what you're about and also political support for the actions that you may need to take. And the third is to use communication to try and enhance effectiveness overall of macroprudential policy intervention. I think John's example just now illustrates that you can try and achieve benefits at lesser cost if you communicate effectively to the industry and the public at large. So these objectives can be, met, or you can try and meet them using several communication tools, some of which actually were mentioned in the previous panel. So an important one is a policy strategy. The Macroprudential Policy Authority can put out a policy strategy that lays out the aims of the macroprudential policy maker, very important, to explain that objective or those objectives to the public. What are we about? Explain also what is the toolkit that we would want to use in pursuit of our objectives. And then thirdly, to talk about under what conditions the tools would be used. So that's known as a policy strategy. And I think Marek had explained how that was produced in the Slovakian context. And I think we've had an example also in the case of Hungary before. The second piece is records of meetings. So you're going to likely have periodic policy decision meetings, and it's a good idea to, at each of these occasions, to put out a record that essentially helps you generate a narrative around, here are the vulnerabilities we're seeing, and here is the potential policy actions that we might take in future. Those records, of course, you also use to record and document, here's the decisions we took at the meeting, and perhaps here's how all of our members of the committee have voted on the issues at hand. And then the third communication tool is a periodic report that can summarize an update on risk assessments, describe past policy actions, and assess, expose the effectiveness of tools. And again, we've had an example just now. Marek mentioned the macroprudential report that's doing exactly that. Other countries are using the FSR to do a little bit of the post-exposed assessment as well. So this is kind of the framework we're sort of using also in our FSUP assessments of countries. There's recent examples, for example, in France had a focus on communication. There was a little bit of that also in the recent FSUP to Slovakia. Next, what are we learning experiences since the crisis. I think a key point I'd like to make is that the debate just after the GFC led to an emphasis on using early warning indicators to guide action. So the idea, and I think goes back to Goodhart, is that you sort of put out the indicators that you would use to help guide your action, and the idea is, those signals you cannot, you cannot wriggle yourself out of. Once you've gotten a signal, it sort of puts you on the spot to also follow through with an action. Now, what we're learning more and more, I think, though, is that the early warning indicators that we've been using are not particularly reliable. We can't really rely on them or that much. Predicting crises is very difficult, and I think we're relearning that again. And as a result, over-reliance on these indicators leads to a lack of protection. We have not had the opportunity to build up buffers ahead of time because we were relying too much on early warning indicators. So we're moving towards a framework of early action, moving away perhaps to some extent from these early warning indicators. And that also has very important political economy benefits. Acting early can be easier from a political economy perspective than acting when credit and house prices are already on the marching up. A good example of this is a case study of this is the experience in Ireland, where the central bank had introduced borrower-based measures back in 2015, I think, at a time when house prices were really just only coming off their trough after the GFC. So as a result of that, house prices were quite affordable for the public, for households, and the measures that were taken at the time were not overly constraining on households, and therefore didn't generate as much political opposition. And that was true even though the measures taken, DSTI of 3.5, I think, were actually quite tight in international comparison, and helped again increase resilience as credit and house prices picked up eventually. So this shift, this makes us think about, this essentially means that we're shifting towards a framework that involves 3 decision points, not just 2, not just tightening and relaxation, but activation of tools early in the cycle, where you put the tool at sort of a neutral set of parameters, and then tightening of tools in light of indications of cyclical increases in risk or changes in the cross-sectional distribution of risk. And finally, the release or relaxation of tools in the event of stress in order to reduce amplification from that stress. And so we have, 3 points that we need to explain to the public. And I think it's useful to think about each. They each may require different approaches. So an example for the activation is here that, the language should emphasize, the objective to protect. And I think Marek had this idea in his talk as well. So we want to talk about how it's useful, early on to generate protections, to generate ways of protecting the economy, protecting banks, protecting borrowers, so that, everyone is well prepared for shocks that might occur in the future. Another way of putting this is to appeal to the logic of taking out insurance against future risks. And again, that can be appealing from a political economy perspective, because people will understand that, it's a good idea to take out some insurance, because that helps later on when a shock arrives. Christine Lagarde put this by saying, you want to repair your roof when the sun is shining. So that's communicating on bringing in these protections. And then we have the tightening phase where you will need to think about what are the indicators that I want to show to the public, perhaps growth at risk, other indicators that can shine a light on cyclical increases or shifts in the distribution of credit. And here again, it's likely we will want to have an effect on credit, and so communication needs to be quite firm there. And then finally, on the release or relaxation, we've again just had a case study of how to do this. Some of you may recall the relaxation episode in March 2020 in response to the COVID shock, here the communication, I think, by the Bank of England was very strong when they made it clear that the relaxation of the capital buffer that they had announced would not be reversed for considerable time. I think they said 1 year, we're not going to reverse the buffer, and then of course you have another year of phase-in. So all in all, the industry knew that they could count on essentially a zero buffer for as long as 2 years out. And that was, I think, critical in ensuring the effectiveness of that release, ensuring that banks would actually use the buffer that was provided to them to continue lending to the economy. And some research that was put out around this, also for the euro area, emphasizes also, finds that the effectiveness does depend on the communication in that way. That sort of brings me, I think, to my last point about issues for research. And here I wanted to start by saying, we have a lot of research on the impact of macroprudential policy tools. Most of that research looks at the effective dates of measures taken. Some research looks at the announcement date of measures taken. What I think is not so common yet is to look at the time it takes between the announcement and the effective date. So what I call lead time here on the slide. Lead time is the period between the effective and the announcement dates measured in days. And I'm pulling this up here because I think the lead time you can think about as measuring, in a way, to some extent, the objective of the measure. So the policymaker is likely to choose a long lead time for measures where the impact on credit isn't going to be first order, and resilience effects are going to be most important. Whereas if you really want to affect credit developments, you're more likely to choose a shorter lead time. So it gives you a window into what the actual objectives of the measure might have been. And we can calculate this here for different types of measures. You see broad-based measures here on the slide, SIFI measures. Those have the longest lead times. So SIFI measures as well as broad-based measures, that's the CCYB, right? And that's in line with the idea that these types of measures are brought in the main to increase resilience. We're not trying to really pull back on credit with these measures. Much shorter lead times are chosen for sectoral measures, in the corporate sector, household sector measures, and liquidity measures are sort of in between. And the easing measures, of course, have the shortest lead times, indicating that there, yes, we do want to have an impact on credit. And it's I find it interesting because this ranking aligns a little bit with actually the some evidence that we've had in a joint paper with Gaston about what are the actual impacts of these measures. And we find that sectoral measures have the biggest impacts on credit, followed by liquidity measures, with broad-based measures last. So this is just to say that, you know, perhaps in future this lead time could be interesting to build into empirical research on the effectiveness of macroprudential measures as well. And I stop here.
Thank you very much. And last but not least, Gaston.
Thank you very much for the opportunity to be here. So where are my?
Oh, nice.
to be here with there. Okay. All right. So usual disclaimer. So others have talked already quite a bit about how difficult it is to communicate about macroprudential policies, and partly, as was said before, this is because, you know, the objective is not really so visible, so clearly measurable, and thereby it's very hard to explain. So what are you trying to achieve, and what is the cost? So the closer we can get to a framework where we can explain costs and benefits in some ways to the public in ways that are relatable, the better. Of course, we have to be realistic. I think financial stability is not something that lends itself really so well, despite very good efforts, to explain to the very broad public. We have to try, but at least we need to reach certain segments of the population, actors, key players, and I think we can do better. For example, some central banks are already using nascent ways to identify costs and benefits and to explain those to the public. And one approach that has been receiving more attention over the last few years is the so-called growth at risk approach, based on work by Tobias Adrian and co-authors. And this is really, you know, based on quantitative regression techniques, a way to try to relate current financial conditions and other variables in the economies to estimate future distributions of growth outcomes. So really trying to relate, in a way, financial variables to growth outcomes. Growth is something that people can relate to. And then you can predict with statistical techniques, in principle, the probability of a recession, the growth at risk. And various central banks have been exploring this. And you know, I don't want to oversell this approach. Everything has its limitations. This one too. But I think it has some interesting potential. In particular, it lends itself to really illustrate the intertemporal effects, and these are part of the trickiness of communicating about macropru. Is that the effects have an intertemporal pattern that's not always so obvious. So let me just illustrate this a little bit here based on our work with Al and others. So suppose you have a distribution of GDP over a horizon. Now you have a loosening of financial conditions, and this in the near term may be good for growth. So you move, you know, your median to the right, but over time it creates risks for the financial system and increases downside risks. And then the idea is to perhaps with macroprudential policy to shift that path of distributions back to in such a way that you reduce the probability of bad outcomes. Now, this is all very technical and complicated, but what you can do is you can create a measure, a summary statistic, right, where you can evaluate this path of distributions and evaluate them based on a loss function, a quadratic loss function, for example. And then you can say, okay, so what happens if faced with the loosening of financial conditions today, if we impose macroprudential measures of different types, how are these gains, which are reductions in losses here in this picture, what's the pattern over time? Here, for example, we see that compared to no action, using macroprudential policies that are either borrower-based in blue or financial institution-based, clearly these are the cumulative reductions in losses based on a quadratic loss function, how you clearly reduce those losses over time. And so this is an illustration. I'm not saying that this is now the way to communicate. No, what I'm saying is that these techniques have the potential to perhaps find ways to say, okay, to come closer to a reaction function in a way for macroprudential policy, to say, people, if we don't do anything, the probability of a bad recession is X% next year and Y% the year thereafter. Now, if we tighten macro-pru, we can reduce this probability by so and so much. Again, I'm not kind of trying to have a blind faith in these quantification techniques. They all have their limitations, but it's a way of translating the complexity of macroprudential policies and their effects to the outcomes that people matter and understand. So that's one point I wanted to make. And a second one, very briefly, when asked to speak about the international experience, I thought, well, what should I talk about? And then it came to mind that really the governance of macroprudential policy is quite different across countries. You have typically the following arrangements. You have either a central bank in charge of everything, or a financial regulator, supervisor in charge of it, or you have a committee, or you have different institutions in charge of different instruments. You can have committees that actually decide on the instruments, but you can also have committees that just coordinate or consult. So what does it mean for communication? Well, and I tried to find out more, and there is not that much what has been explored in this area, but a few things come out. So not surprisingly, in jurisdictions where one body is responsible for macroprudential policies, then this becomes more transparent, and those bodies, they publish more regular reviews, and that makes it easier to achieve accountability and to be more transparent. Also, interestingly, there's some evidence that financial stability committees that have strong governance, that is, they have a strong legal basis, they have voting mechanisms, they have authority over tools, that they actually are more active in, say, activating the CCYB. And interestingly, also when either the committee or the finance ministry has direct authority over the CCYB, the probability that they actually increase it is higher as when just the central bank is in charge. And now the role of the central bank is ambiguous, and I don't have time to go in there. There's some evidence that says that when the central bank has a stronger role, that's good. But what we know in terms of communication, and this is based on a paper by Londono, St. Clair, and Correa, is that when central banks are part of a financial stability committee, especially such committees that actually do have legal powers, these central banks, they communicate more effectively about financial stability risks. And it becomes also more credible. Central banks with macroprudential responsibilities, interestingly, tend to maintain a calmer tone during crisis. or the market periods of market stress. And something that also like emerges as a bottom line is that the communication needs to be aligned with the tools that you have. It's kind of simple insight, but it's important, right? If communication can be followed up with actions, then of course communication is much more powerful. But overall, this is an area where we were still trying to understand how governance structure really relates to communication and communication effectiveness. So something to explore further. Thank you.
Thank you. And maybe one thing that came to my mind when listening to you is how does that fit? I mean, this knowledge about the different setups, how does that fit into the highly complex setup in Europe? So what's the best communication, for example, in Europe? How should we communicate as a macroprudential policy community with the ECB, ESRB, and national central banks, national financial stability committees? And how does that relate to supranational organizations with their own objective and mandate, like the BIS or the IMF?
Well, I mean, I think that there is a complementarity there, right? National authorities know their systems best, they know their institutions best, they know their history best, and so forth. But supranational bodies, they typically more able to see the international connections, right? And these have become more and more important. So to give you a concrete example, we at the BIS are currently highlighting the role of the huge FX swap market. It's $110 or so trillion. And why is that important? Well, it connects the financial system globally. So you have, in particular NBFIs, using those FX swaps to manage their portfolios globally, and you see the repercussions, right? For example, last August when the carry trade was unraveled, then this one happened very quickly. So it's a manifestation, and just an example, just to tell you, looking at these things from a more global perspective has benefits. And also, I would say sometimes supranational international bodies can complement the role of national ones in the sense that they typically central banks have a more separate kind of organization. They look at financial stability. They have the groups on financial stability and macroprudential, very separate from monetary policy, for example. And we at the BIS, for example, we look at things a bit more jointly, and we work on in a fluid way on macro financial issues from all kinds of perspectives, and the same is true at the IMF. We can also talk about fiscal policy, perhaps even more the IMF than we at the BIS. So there are these complementarities, so we can communicate in different ways that is complementary to that of national authority.
Could I add something on that? Because you were making me think, I mean, we have many layers, as we know, it's complicated. And but I do think there's a lot of coordination, a lot of sharing of information. And also, I don't know whether we can put it back up, but it was just the chart that I had showing the sentiment across the Bank of England, the ECB, the Fed, and the IMF. You might have known at the beginning there was more dispersion in the sentiment levels. And now, I'm just looking at it here to see if what I'm saying is true, but it looks like it would statistically show that there's more convergence in the.
Well, hopefully, that's not hurting amongst.
So right, yeah, there is. Of course, there is always that. I had in an earlier life, I was a macroeconomic forecaster, and we were always looking at what the others were doing, of course, and no doubt there is some of that going on here. But I think there is. before the GFC, the IMF and the ECB and the Bank of England had wildly different views on where we were in the financial cycle. Yeah, I mean, I haven't seen that kind of level of diversity since then. But we have to be wary of what you say. Yes.
I'd just like to add that, there's likely to be some things that are common across countries and some things that are a little bit more different.
Sure.
Right? So in the GFSR, we often start out the picture with, again, a growth at risk, financial conditions. Are financial conditions easy? Are they tight? That is a frame that I think is very likely to be common across countries. But already when you look at real estate markets, right, there's a wide range of conditions across countries. We've seen divergence even after the GFC, right? There were some countries that had big downturns, and then they came back up. In other countries like France, they've never had a downturn in the residential real estate market. And the Nordics are a group of their own in terms of what happens to their real estate markets. So I think national publications are much better at drilling into these more domestic vulnerabilities that hinge on not just overall financial conditions, but also supply constraints and the structure of the economy is different across countries.
Yeah, I think we've done work on looking at the individual financial cycles across the euro area, and they are actually quite different. But still, I mean, I think what we're trying to get at is the common component, let's say, across all the countries, and that sets a kind of a context, I guess, then for the national FSRs, giving value added, I think, for both.
I mean, you just mentioned the different financial cycles within the euro area. I was a bit surprised that you compared the FSR only to international bodies or international, so like the Bank of England, IMF, and the Federal Reserve. I would love to see the same chart for the comparison with the euro area member countries' financial stability reviews, the sentiment there. To what extent the different financial cycles are manifested maybe in a diversity there.
You're suggesting future research for colleagues.
Fantastic.
So, I mean, I think it's very well worth doing. I think it might have been to do with the time series. I'm not sure. I mean,
yeah, I mean,
it's worth doing.
It was also mentioned that sometimes communication can be self-fulfilling. I don't know how many central banks didn't publish a financial stability review in 2008. We were among them, so we haven't published something. How do you, in your institutions, discuss what to publish or communicate and what not? Against the backdrop of potentially
in a crisis, or
not just a crisis. I mean, sometimes you talk about certain things like FX swaps and leverage trades and things like that, and this may create a situation where you trigger concerns.
I think we hope to raise concerns before they have gone past a tipping point where it would become self-fulfilling if you communicated about it. And so that means being relevant, preemptive, and so on. If you've got something that looks like you just need to give it a little nudge and it's going to blow up, that's yeah, you would hope that you would never get to that situation, quite frankly. But I think that we don't anymore because we are earlier in this. I think we've gotten better at this.
I think so. I mean, the chart that you show is very encouraging, right? About the risk management practices. That's what you would want to achieve. So I think that's the aim. In the middle of high tension, you wouldn't single out specific institutions or things like that. That's obvious, but I think in general, you would want to alert of developments with the hope that by pointing at them, risks are mitigated, actors take actions, and risks are reduced.
Yeah, I just wanted to say I agree with that. I think we would want to publish on risks that are still such that you can take, someone can take policy action against them. Right. If it's beyond that point, then I think the communication
you're in crisis then really.
will change.
Yeah.
And one thing we experience when we communicate the financial stability report is sometimes we give presentations in the various cities in Germany. We don't reach the younger generation, obviously, because in most cases it's elderly people having the time to listen to our presentations, and they are quite active also in discussing. How can we approach the younger generation? I know you try hard with podcasts and things like that.
Yeah, but it's not only us. It's also we learn a lot from our. It's a joint effort with our communications department. So we put a lot of effort into exactly this. Somebody was asking me at the lunch break, how does that work? I mean, who comes up with the questions? I tend to wait for them to come up with what they think are the relevant things. But then there are also other kinds of gimmicks. Like I'm asked to come up with a hot tip at the end of each and every podcast, and I say, try to recommend a YouTube video that this guy made on this thing, and so we do really, and to try to make it more tangible, more to make financial stability concepts more understandable for younger people. The first time I recommended a YouTuber, there was a bit of a shock from our communications people. They really wanted to check out this YouTuber. I thought this guy was great, and he explained all kinds of stuff much better than I could ever have done. And so I think it's being aware of what social media and things younger people are looking at.
I think periodically reminding people of the bad consequences of severe financial crisis, it can be very useful. I mean, younger people, for them, the GFC is already, they may have experienced that in their childhood, or so just to remind, find ways to talk about such episodes, what they meant for people, right? People losing their houses and so forth, their jobs. I think that would be very, very useful.
I mean, we made the experience that reminding people of the crisis was generating a kind of attrition. So people don't really they have no real connection, because if you go to a university, you talk about the great financial crisis. It's sometimes like the grandfather talking about something that happened.
I mean, but that's a matter of general. I mean, I read all the stuff about the crash of '29 and all this. I mean, there's a long literature on, it's interesting. Financial instability it's interesting to read.
No, but we tried to be more positive, and that's what the YouTube video tried to do. That financial stability is simply the absence of something that bothers you, right? I mean, it's more positive, but nevertheless.
Also had the black clouds, right?
I mean, sometimes you need some action.
There's a shark in the water.
So any efforts?
All I would say is that, of course, it's very important also to reach younger generations, because you think about borrower-based measures and LTV in particular. The cohort that tends to be most affected by that is people in their 20s, perhaps, that want to get to their first own house. So
or job.
Yeah, or well, so it's important to reach that generation and make the case that, as I said, we need these protections so that we stand a better chance of being able to survive the next economic shock.
I mean, you invested a lot into the broader communication, these podcasts, video casts, and whatnot. How do you measure the impact of that? Is that
God, we get all. I mean, I get numbers back whether or not people listen more or less compared to the last time. Demographics, everything. They have the statistics.
And
they're able to monitor.
Does it say? What does it say? Is
it
encouraging?
Well, I mean, we find out whether or not people listen to the whole thing. Do they switch off? And then we get a breakdown. Whether it was men or women or of a certain age that gave up listening. 10 minutes in. So we get actually a lot of data, and I think over time we can do analysis of all of this and to see, more data we can generate out of, getting feedback from the public in this indirect way. I think we can do kind of empirical analysis and just make it more interesting, get better at it.
Would you recommend that as a potential channel to communicate to the wider public, given the potential costs that are associated?
I must say, I didn't think that it was going to, the communications people thought that this would be a good thing to do during COVID. And I guess for reassurance, the communication, I think, around financial stability is kind of counter-cyclical as well. You want to warn them in good times, but you want to, reassure and just, the population is looking for leadership, intellectual leadership somewhere, and we can give it and say, look, don't worry, it's where we have it under control, kind of, and I think that was the reason that we had it. But then they found that people were listening. It wasn't I had to be a bit dragged into it because it was kind of a new thing for me. But yeah, I actually really enjoy it now because, it's like you cannot use words like what Piroshka was saying this morning, macroprudential, it's boring. So you have to think of, a more attractive way, to kind of think, how would I explain this to my mother? Or to the guy who cuts my hair, this kind, putting more effort into, and even just trying to, what do you really mean? So I think you need to be more, by adapting the language to language that we take shortcuts with jargon. Maybe you only half explain things really, but when you're forced to do it in real, the language that, ordinary people are using, you need to be more precise in your own thinking as well. So, I think it's really helpful for myself in the communication that I have to do. Then when I go to governors where, they're used to macroprudential and all the other terminology.
Thank you very much. Time is up, I guess. Hand it over to Rainer.
Just remain seated. I'll be very brief. I will not even try to summarize because then we're here. So I will not try that, but nevertheless, a few points I just wanted to raise because they came up so often during this event, which I found overall extremely instructive and insightful. So one of the key things is clearly the audience. I think this came up in most of the presentations, and the distinction between the expert audience and the wider audience. And what I really liked was the link that then was made with financial literacy. And actually in the last panel also a link with financial history, because that's also part of it, right? And I think financial literacy is probably one of the most underrated areas in the field of finance and education. And I think this is really something very important. By the way, not just for the wider public, but also for experts, because also I think of economic journalists sometimes it's also good if they are, given the tools to assess then the information. Now, we heard a lot of reasons why communication on financial stability and macroprudential policy is very difficult. And I think it did not really come as a surprise. The risk of self-fulfilling prophecies, the political sensitivity, especially when it comes to borrower-based measures. And then what also came up a bit more often than I expected, the term financial stability is boring. I have no idea how one can find it boring, but okay, apparently some people find it boring. And of course, this notion that you're the party pooper if you go there. And I think, Marek, you may also mention this. You're the guy who comes in the party, switches on the light, takes away the punch bowl. So you're not very popular if you do that, obviously. Now, on a more positive note, I think we heard a lot of good practices. I found in the second panel, this little review across the 4 countries, a lot of very good ideas. I like, for example, this concept of tiered communication, of constant communication. I think this is very, very helpful in some way or another. I think most central banks are doing it. But what is probably missing, and maybe this event today could help a little bit to change this a bit, is to have a more structured exchange of best practices and a more structured exchange of views on this. And I mean, here we have 3 European and international organizations represented. Maybe that's a nice topic for a task force or a working group or something like this. If you tell Francesco, I'm sure he'll pick it up immediately. Okay, I didn't say that, that's off the record. Right, okay, so I think let me leave it here in terms of the contents to a few words of thanks. First of all, of course, again, heartfelt thanks to all the speakers and moderators who came here today from very far places. Erland, you win the prize for the fastest, the longest trip, sorry. But we really appreciate that. Everybody came in person. This is fantastic, and this is definitely not standard. So many thanks for that. Big thanks to SUERF, to Ernest, to Dragana. It's the 3rd event that we are doing with you here. It's always great pleasure to work with you. Already looking forward to the next one. And a big thanks also to Jan, to Victoria, and to Tatjana from the Vicky is here. She left. Okay. Well, we pass it on. Okay. So who prepared all the logistics here, and I think they did a tremendous job. And of course, to our IT department, thank you very much for the great work. Everything worked very well. Thank you very much. Let's close here. Safe travels back. I hope you enjoyed it. Thank you very much for being here and hope to see you again. Bye-bye.